as this global recovery is unfolding, investors need to think more global in their portfolios as well.
There's quite a bit of momentum, and it's going to spread out into 2022 and 2023.
You may even start to see some deflationary forces kind of work their way back into the system.
The Fed now needs to transition and think about risks of higher prices, higher inflation.
The pressure will grow on the Fed to announce QE tapering. I think the debate at the Fed is shifting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
5-day winning streak coming into Thursday from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures 42.94 on the S&P. We advanced 6 points, TK. We're kicking off Q3.
Well, we're kicking off Q3. We've got jobs and all that. We'll get to that. We've got Jul.01 coming up as well. But, John, I agree with you. Kicking off the second half of the year is a huge deal. How many people were wrong about earnings strength? Gina Martin Adams of Bloomberg and many others nailed that. And the fact is, we're all sort of shell-shocked by what we've just seen over 180 days.
So let's frame the forward look, Tom. 4,300 is your median estimate from the strategists that we survey for year-end on the S&P 500. 4,600 the high end. That's Credit Suisse and Jonathan Gollab out front with that call. 3,800 the low end at Bank of America. How many upgrades do we start to see in the coming months if this continues?
It's like, John and I never talk, folks. We're barely on speaking terms. But
Everyone
unfortunately,
knows.
the zeitgeist today
Not a secret.
is dead on. Joyce Chang at J.P. Morgan in the last hour reaffirms 4,400 for J.P. Morgan. And, John, I'm sorry. What they're doing in every other shop, just as you say, they're waiting to get the first gloss of earnings, and assuming it's the zeitgeist, it's going to be better than expected. They're all going to go, what do you think, John? I don't think of 5,000 on SPX, but they're all going to come up.
They're going to come up to what, Lisa? That slow grind just pushing them higher. That slow mount up, record high after record high.
Yeah, I'm not going to give my quarterly expectation of where we're going to end the year in the S&P. What I will give you, though, is that backing this grind higher in the equity market, we're seeing a grind lower in corporate bond yields. And if you take a look at spreads, the extra yield that you earn over benchmark rates on investment-grade credit dropped to a new post-crisis low of 80 basis points. This, to me, is shocking because it's really almost near record lows.
So what? Lisa, translate that for mere
two
mortals.
Things. This symbolizes two things. First of all, there's no concern right now in markets about a default cycle. That's number one. And number two, there is a re-leveraging or perhaps a doubling down on leverage in corporate America. And you can see this from the net issuance, the net buildup in debt climbing to all-time highs. John, how much longer can this push the rally out? Quite a bit.
My favorite line from JP Morgan, we see little value in spreads here, okay, and nothing to push them much wider either. The second part of that sentence, Lisa, is the problem.
Well, that's the whole thing. What's going to cause a sell-off, especially with the Federal Reserve that's shown its willingness to back this market?
It's true. Bottom line, many people think the Fed is there supporting this market, and that's, Tom, one of the reasons why we didn't really see much for mess
You need
last
worry
year.
to go higher, and Lisa just elegantly put it. I'm sorry, John, it's a pendulum of growing debt. OMG, growing debt. The Salesforce issuance the other day, what did we see? Was it Amazon or Apple? I can't remember here, 50 days ago or so. The growing debt out there, OMG, I can't be in the market.
OMG.
I'm worried about debt.
Well, Tom, that's going to shape our tolerance for higher interest rates as well.
Yep.
What can the Fed do in that environment?
Well, what the Fed's going to do is be data dependent, maybe as data dependent as they've ever been. But, John, I have never been more focused on what we're going to see on earnings and earnings guidance from companies. I just can't convey how this earnings season is different.
That kicks off July 13th with JP Morgan. Here's the price action this Thursday morning. 42.92 on S&P 500 futures, advancing almost 0.1% on the S&P. Nasdaq a little softer, lighter, lower, down 12 points on the Nasdaq 100. Yields come up about a basis point to 147.81 on 10s, and euro dollar kicking off Q3 south of 119.
Look at oil.
At least 118.52.
Yeah.
And Tom, just for you, 74.16.
Yeah, I mean, OPEC's in the mix.
I agree.
The Bentley was down today, so I took Kenny in a lift, and, he's complaining about a gallon of gas.
We call him Kennel Fee Kenny now.
Yeah, Kenny.
We're getting there. We're getting to oil in just 1 second, because in the day ahead, we should get a sense of what we can expect with respect to supplies coming back online. 8:30 a.m., though, let's get started with 8 a.m. 8:30 a.m. jobless claims, the initial claims of the week. I am very interested to see how much further this falls. The expectation is for 388,000 408,000, down from 411,000 last week. Again, the steady climb lower. At what point do we reach a feeling that perhaps the labor market really is improving more dramatically, sort of drumbeat to tomorrow's non-farm payrolls? Today, also, we're going to be getting the OPEC Plus meeting to consider output boosts. This speaks to your point, Tom. This question of, based on the incredible demand coming back online, will Saudi Arabia allow some of the output production to go back into the market? This has been the argument for the likes of Russia. Saudi Arabia has pushed back. Also today, U.S. auto sales to be released for the month of June. The expectation is for it to decline quite a bit, not because there isn't demand, but simply because the supply is not there. This goes to the chip shortage that we've been talking about, John. If you look at a lot of dealer lots, they're a lot less crowded than they have been in the past, even as you have a growing number of consumers coming in looking for cars.
Lisa, thank you. Let's get our teeth into the second half of 2021. We can go to Win Thin now. Brown Brothers Harriman, Global Head of Currency Strategy. Win, I just want to start with the economic data, where we've been and where you think we're going, and the data that you'll be looking for when that payrolls report comes out tomorrow morning.
First of all, good morning, and thank you for having me. It's always a pleasure. I think we talk about looking back at first half and looking forward to the second half, but it's really been a tale of several quarters. The first quarter was the U.S. vaccination rollout. The U.K. vaccination rollout was miles ahead of everyone else. Dollar was towering ahead. Equities are strong. Interest rates are rising. Q2, we saw a bit of a pushback. The rest of the world were catching up. We had some softness in the U.S. data. Now Q3 starting out, I think we're back to what we saw in Q1, that the U.S. is outperforming in terms of vaccinations, in terms of reopening, in terms of growth. So, yes, we had a couple of soft numbers in non-farm payrolls. As you point out, the consensus is I think 711 for tomorrow. And I think that the Fed and I think everyone else has been shocked by how fast the vaccine rollout has come, how fast inflation is rising, and how prolonged that inflation may go. So the Fed is in a very delicate balancing act. Right. We know that they need to see the improvement in the data. I think we're going to get that. There's all sorts of issues in the labor market. It's hard to see what's any structural changes, but I think the U.S. economy is in really good shape for half two.
When I think very clearly on the Bloomberg terminal this morning that the major country DXY index is doing better than the Bloomberg DXY index. Basically, BBDXY is underperforming DXY. What does that mean for EM in the next half? In the next 180 days, does EM go to sleep as we see strong dollar?
Tom, that's a really the million-dollar question, and I think it goes into what Lisa was talking about earlier about spreads. And to me, EM is in a sense a spread product, right? It's sort of the risk assets. It does well when in periods of abundant liquidity, strong global growth, but it gets a little dicey when the Fed is tightening and the dollar is gaining. So I see sort of a divergence, and we've seen divergence already throughout this year. I think those divergences will continue. Those EM countries that are tightening already will probably get a little cushion. That's Brazil, Russia, several others. Korea's teed up to hike. So is Chile. Mexico already hiked. So I think this goes back again. I'm going to square the circle. We're seeing, to me, an inflection point in global liquidity. The Fed is going to taper. There's no doubt that they're going to taper possibly by year end. I'm not sure the markets are prepared for that. We've been talking about it, but I really wonder, given where spreads are, given where EM is, if the markets realize that EM is tightening, Bank of England, Bank of Canada have already tapered. So, I think there's going to be a little bit of a catch up. I like the EM story in general, but look, for instance, Asia is doing very badly with the vaccine rollout, and Australia is there. Yeah. They're having really trouble reopening. So again, it's sort of king dollar to me. Everything's at this point going right for the dollar.
So if we're talking about dollar strengthening, the main issue that you're talking about is the divergence in central banks. And yet that hasn't been always the dominant driver of currency in the past, say, 2 years. We've seen also economic growth being a main driver, the recovery trade in terms of which region is entering the biggest and most rapid phase of recovery from the pandemic. Why are we shifting back to a central bank divergence, policy divergence kind of platform that's going to influence currencies?
Well, Lisa, I think the point I would stress that those stories are two sides of the same coin, right? we wouldn't be talking about removing accommodation or tapering here in the U.S. unless the U.S. growth story were exceptional. And so, it's to me, it goes back to how we came into this crisis. If you think about it, the countries that came into this crisis strong, that is the U.S., the dollar bloc, Norway, perhaps, they're the central banks. Those are the countries that are coming out the best, and those are the central banks that are really talking about removing accommodation. Those countries that went into the pandemic fighting deflation, that would be the ECB, the Bank of Japan, Swiss National Bank. They were in absolutely no hurry to remove accommodation. They've been fighting deflation for many, many years, and they know that they do not want to move prematurely. So it's in a sense, the economic divergence is driving the central bank divergence. Obviously these factors change, but we are coming out of a period of exceptionally low interest rates, and I think that's why, this inflection point is so important.
Win, thank you for being with us this morning. We appreciate it. Win Thin there, the Brown Brothers Harriman Global Head of Currency Strategy. An opinion piece, an opinion column on Bloomberg Opinion just dropping from the former New York Fed President, Mr. Bill Dudley. He says the Federal Reserve will taper, but TK, don't freak out.
Yeah, I'm speed reading through it. I mean, folks, we get this just like you do off the thing. You'll see it on Bloomberg.com. And I like what he says about his definition of substantial further progress, which is, my goal of getting through the weekend, not in the 100-degree temperature. But Bill Dudley's substantial further progress is out several months. That's important. My
issue, though, Tom, is that he says the Federal Reserve has a plan this time in a way that they didn't in 2013. He goes through it point by point, talking about tapering, 1, 2, actual tapering, 3, raising interest rates, and then the gradual runoff of the balance sheet. The issue I have with that, Lisa, is that, yes, they have a plan. The problem they have is that markets know the plan. And the market will begin to start thinking about the next stage of the sequence and start moving further down the road pretty quickly.
That's actually what I've been giving a lot of thought to, especially with respect to some of the criticism around the mortgage purchases at a time of such elevated valuations in the housing market. How much are they sort of stymied by their own guidance that once they start, they are in this process and people will extrapolate forward, John?
And I'm sure the core of the Federal Reserve are concerned about that
too.
They
have a plan.
They have a plan, TK. It's
Talk
good, isn't it?
England has a plan against Ukraine.
They've got a plan too on Saturday. Have you got a plan for how you're going to watch that game?
The Ukraine guy's hurt.
Which one?
I don't know. Somebody on Ukraine's hurt.
Good to know. That's your football update this morning on Bloomberg Surveillance. One of the guys is hurt.
One of the guys is hurt.
Value add.
Padres
Tom Keene, Lisa Abramowicz, Jonathan
Padres
Ferro.
came back and beat the Reds.
Let's not do sport this morning. Let's focus on a market. 42.93 on the S&P. 5 days of gains coming into Thursday. Jobless claims coming at 8:30 Eastern, 6:12 in New York City. Good morning. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. A grand jury in Manhattan has handed down criminal charges against the Trump Organization and CFO Alan Weisselberg. The charges will remain sealed until today. They're the first to emerge from a multi-year investigation of the former president's company. Neither Donald Trump nor his sons are expected to be charged. China's President Xi Jinping sounded a defiant tone today in a speech marking the 100th anniversary of the country's Communist Party. Xi called China's quest to gain control of Taiwan a historic mission, and he warned that the country's enemies will break against a, quote, steel Great Wall. The House has passed a Democratic bill to form a committee to investigate the attack on the Capitol. Only 2 Republicans voted in favor of it. The rest of the Republicans are dismissing the investigation as an exercise in partisan politics. And Citigroup CEO Jane Fraser says that almost all of the bank's employees will return to the office. Still, she says there will be a blended approach that allows for some flexibility. Earlier this week, Citi said that its policies allowing some work from home would give it a competitive edge in recruiting and retaining top staff. Robinhood reportedly plans to set aside as much as 35% of shares in its IPO for individual investors, a bigger percentage than normal. Dow Jones says the stock trading app wants people to sign up to buy the shares on its new IPO platform. Retail investors are largely shut out of IPOs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
I think it'll be far healthier to start soon and sooner rather than later. Why? Excess risk-taking, excesses in the housing market, and imbalances, excesses and imbalances in the overall economy. And I do believe if we take our foot off the accelerator gently now, we'll have more flexibility down the road to avoid more abrupt action or severe actions in the future.
That was Robert Kaplan, the Dallas Fed president, catching up with Michael McKee yesterday on Bloomberg TV and radio. From New York City this morning, good morning. Tom Keene, Lisa Abramowicz, Jonathan Ferro. Before I turn to the price action, TK, can we just talk about what counts as a hawk over at the Federal Reserve these days? This is what we're calling the chief hawk. Many people are. It's the Dallas Fed president, and he's talking about taking our foot gently off the accelerator. That tells you a lot about the world we're in right now. This is not the likes of Plosser from Philadelphia, Fisher from Dallas. This is a different world.
It's a really important distinction, John, and I go back to the artwork of John B. Taylor out at Stanford University on the gaps in the range, if you will, around 2%. We haven't discovered the high end of that range in years. And the hawks are practicing being hawks. It's a work in progress.
Do you think Coach Lakota won the argument all those years ago?
I think he won.
Do you think that's fair?
I think the gentleman from the University of Rochester in Minneapolis did very well on that. I mean, it's all 20/20 hindsight. I'm pretty gentle with the inflationistas, and frankly, someone like Paul Krugman, I think, has a respect for the theories that they had, even though he fought with them the whole way. It's not about being right there. It's about looking forward. What are we looking forward to, given the fiscal structure right now? It's totally different.
Let's turn to this price action just briefly, Tom.
Sure.
42.92 on the S&P
Look at the
500.
lift.
5-day winning streak coming into Thursday. Your bond market yields are higher by 147.81. That's the yield right now, up by about a basis point. Euro dollar 118.54. Unchanged on euro dollar as we kick off Q3, Tom.
And remember, it's a jobs day pace here as we go into claims on this Thursday and jobs day tomorrow. Anne-Marie Horton joins us now on The View from Washington. Anne-Marie, the team wants to get to you on infrastructure and the other issues of the moment. I've got to look at the late Donald Rumsfeld. I had a wonderful interview with him, literally on the peeling paint of the north wall of the White House years ago. And all I can associate with Don Rumsfeld, with all his controversy, is the long war. Where's the state of exhaustion in your Washington now to the long war?
Well, incredibly exhausted, Tom, and we're just off the heels of the meeting with the Afghanistan president here with President Biden in Washington, D.C., and they discussed that troop deployment. That is part of President Biden's plan by the end of this year, by September 11th, to have troops, besides low-level presence for diplomats, to exit Afghanistan. This is the longest war in U.S. history. On top of that, besides, first and foremost, the human consequence, also close to $1 trillion on the Afghanistan war. And then, of course, there's Iraq. And as you mentioned, this is the chief criticism of the late Donald Rumsfeld.
And what's so important here, and Stiglitz of Columbia, folks, has been the best I know at counting the beans of this expense of these long wars, is now what for the military coming into 4th of July and a recalibration of what the military does. It seems to be it's going to be front and center for General Austin at Defense to recalibrate what we do.
Yes, certainly, and recalibrate where the troop deployment is, the level of deployment we have and the presence we have, particularly in the Middle East. We also still have a presence, of course, in Iraq. That is one of the main criticisms. Influential career and definitely a controversial career, as many would say, for the former Defense Secretary Donald Rumsfeld. In Iraq, particularly, Tom, really the criticism was about engagement on leaving. What was the plan to leave these countries? And clearly you see the United States has just been dealt there in the Middle East for a number of presidents who have just struggled to get troops out.
The long war overseas, the long war back at home has to do with infrastructure. Every week is Infrastructure Week for the past decade. This time, Infrastructure Week is actually trying to get something done, or that's what we hear. The latest is that the White House is trying to pressure the GOP by talking about how infrastructure, bridges, roads are crumbling. Is the GOP their main concern at this point?
I don't think the GOP at the moment is the main concern in terms of hard infrastructure in the Senate. But I take you to the House yesterday, because that's really where the action was, where Speaker Pelosi came out yet again and said that the House will not, she reiterated that really red line in the sand, the House will not vote on the bipartisan hard infrastructure plan until it is also passed in tandem with a multi-trillion-dollar spending human infrastructure, if you will. And really what the House is doing right now is they're communicating communicating on how they would like to see a hard infrastructure bill. Very similar to what we're seeing in the Senate, but definitely a little bit more emphasis when it comes to hard infrastructure on climate policies as well.
Are we getting a sense of the contours of the reconciliation bill that's being drafted alongside the bipartisan act?
It's still very much up in the air, and this is all negotiations verbally. Nothing has been drafted yet, Lisa. And the main sticking point is going to be the price tag. You have the $6 trillion. That is what Senator Bernie Sanders is looking at. But then you have moderate Democrats who are saying that might be just a little bit too high. They are for the increase of taxes to really provide for this human infrastructure and multi-trillion-dollar spending, but not to a level that many of the progressives would want to see.
Anne-Marie, we're touching on a ton of issues here. Let me just finish with one more, if I may. The Trump Organization, very much in the news in the past 24 hours. What are we looking for this morning?
Well, today is the day we are set to get those indictments. We know that they were indicted yesterday, but they are sealed right now, so we're going to get those charges. I think something that many people might be confused about is this is for the Trump Organization and for the CFO of the organization, Alan Weisselberg, excuse me, and the thing to watch out for today, of course, is exactly what these charges are. So those indictments are under seal. We're going to get them today. And the thing with the CFO is he doesn't have a Trump last name, and he's the only person without a Trump last name that is so close to this organization. So we're going to be looking out for those charges. In Washington, D.C., of course, it's important because of just the president's hold on the Republican Party. So this is something that people are really looking forward to see exactly what these charges are.
One to look for a little bit later. Anne-Marie, thank you. Anne-Marie Hordern, our Washington correspondent down in Washington, D.C. Your equity market 42.90 on the S&P 500 as we kick off Q3. Futures rolling over just a little bit now, Tom. Unchanged on a session almost.
Day after day after day after day, we go up. And I'm sorry, by the time we get to 2 p.m. and the close, you know what? We got a lift going on. I mean, it's there. It's
that
tangible.
complexion of that grind has shifted, though,
yes,
through the past quarter and coming into Q3. And, Lisa, that has been about big tech versus, say, let's pick one sector, the banks, the financials.
Yeah, and if you take a look at the value shares, if you look at the Russell 1000, for example, it's been one of the biggest underperformances over the past few months, going back to 2000. I mean, just to talk about some of the divergences that you're seeing, the idea here going forward, are we going to double down on this recovery kind of phase, or are we shifting into a recognition of a reality that's more disinflationary? And I know that, you know, I'm going to get the pendulum of disinflation, but, you know, here we are, John.
You couldn't help it, could you?
I couldn't help it.
Lisa, just the same script, Q1, Q2, Q3, just waiting for it. It could come in Q3.
It could?
Could come. Yields 147.64, up about a basis point. From New York City this morning. Go on, Tom.
Ukraine is stacked. I think they look really good.
Thank you, Tom. Value add all morning on TV and radio. Don't miss what's still to come.
Good morning,
Really
Kiev.
trying hard to tease
Go to
this.
cash.
This is Bloomberg. Five days of gains coming into Thursday's trading session on the equity market on the S&P 500, 42.89, pushing 42.90 on the S&P 500. 5 days of gains, 5 months of gains, 5 quarters of gains on the S&P 500. We just keep grinding them out. Your Nasdaq this morning down by about 0.2%. Bit of underperformance there, just a little bit. But if you switch up the board, you'll get a flavour, a sense, a picture of the outperformance on the Nasdaq over the last 3 months, over the last quarter, over the last 1 month on the Nasdaq 100 as well. What's driving that? This is what I wanted to finish on. Pick any slice of the curve, 2s, 10s, 5s, 30s. I've gone with 2s, 10s. Let's switch up the board and get there. 2s, 10s over the last 3 months has declined by 28 basis points. You have to go all the way back to January 2015 to see a move like that. January 2015. Early 2015, what were we doing in early 2015? The ECB included sovereigns in its asset purchase program. That's how big the move has been on a 2s, 10s curve over the last 3 months, Tom. A move we have not seen like that really since early 2015. What's driving it? Is it a reflection of what's happening in the equity market too?
Yeah, Riley, stay on that. That chart, folks, is a chart John Ferro and I never, ever, ever, ever thought we'd be talking about 7/1/2021. John, that pullback curve flattening is extraordinary.
Hold on a second. You made fun of me for disinflationary. That's what this suggests.
That's true.
It doesn't suggest the end of the world,
Lisa.
Lisa.
The pendulum of truth.
Just 122 on 2s, 10s.
Carry on.
Don't get excited about the end of the world. just looking at a move of 28 basis points. Yeah. Thank you, Lisa.
I think it starts July 13 again. I'm going to go, John, earnings. Right now to dovetail earnings in, I do want to bring you a headline. We're going to be following this all day. This is the chief financial officer of the Trump Organization. This has been widely anticipated, as reported by the Post last night. The process will begin out of Cyrus Vance's office in New York. This is the first actions. The word indictment is used with the chief financial officer of the Trump Organization, widely expected to touch on the use of taxation and benefits, but you wonder if there'll be a surprise along the way. We'll process this all through the morning, and we believe we see documents this afternoon as well. Right now, we always read the documents from Joseph Livornia with Natixis CIB, their chief economist of Americas. Joe, what have you tweaked recently? What's the thing you're tweaking here at a mid-year review?
Interestingly enough, Jonathan was talking about 210s, and you said, why did the curve has flattened so much? I want to just talk about that for a minute, Tom. And
please.
That's been due to the market's expectation of the terminal Fed funds rate coming down significantly. And on your Bloomberg terminal, you can pull up your 5-year OIS, and that's rallied from about 240 basis points, which was the peak in the funds rate in the last cycle, to around 170 basis points. So we've basically had a 70 basis point rally since April, and where the market thinks the terminal rate will end this cycle. And that accounts for the substantial flattening. And yes, you don't have much inflation pressure in the system.
I'm thrilled you went there, Joe. Let's focus on this now. And it's Joseph Livornia of Natixis, Jan Hatzius of Goldman Sachs, and others saying we're going back under 3%. Do you agree with that, Joe, that the terminal value of our economic growth is under 3%, whether it's Feroli's under 2% or Hatzius is under 3%?
It doesn't have to be that way, Tom, but that seems to be the consensus of forecasters. And even in the Biden budget, they're forecasting GDP of 1.9%. So it does seem like the consensus of forecasters is shifting down to a sub 2% world. I would love to see 3%. And it's possible we can get 3%. I'm not a pessimist on long-term productivity growth, and it's very possible that this crisis, this pandemic, was an accelerant to productivity growth, or we're going to find these great new ways of doing business actually long-term could lead to higher productivity. What I can tell you in the short term is the economy is booming this year. It's got a tremendous amount of stimulus. That's the reason why the equity market's up 5 straight quarters. The economy's doing well. Next year, it will slow. But where it goes beyond next year, Tom, will be a function, I believe, of regulatory policy and fiscal policy. And if we get the right program in place, I don't see why growth can't be much faster than 2%.
Joe, I want to tease out a couple of scenarios, given what you have just said, and maybe take out the last bit. What's the chance? Can you envision a scenario where the Federal Reserve gets stuck down here?
Oh, absolutely. I've done a few interviews with some other sources saying I believe the Fed is stuck in a box. And I say that because, simply put, if the Fed can't taper the economy when GDP is running at least 7%, maybe 8% this year, how is it going to taper next year when the economy is downshifted massively and inflation's moving lower? They have a real-time inconsistency problem. I don't see them being able to do it. And in the last cycle, it took them 7 years from the last rate cut to the first rate hike. And I believe it was 4 years from the time they began to taper. So they're not going to move anywhere near as quickly as they think they are.
Bill Dudley out with a piece on the Bloomberg terminal this morning on Bloomberg.com, on Bloomberg Opinion, saying the Fed will taper, don't freak out. Joe, do you think it is that easy, that simple, that straightforward?
No, I don't. I don't. The market, I would argue, if you look at the forward market, as I highlighted at the outset, the market does not believe the Fed is going to taper. The problem is the Fed last year bought 45% of all treasuries. They were the single biggest buyer. And their balance sheet is approaching 40% of GDP. Their ability to navigate the taper is significantly more difficult today than it was 8 years ago. So I think to say that they could do it and it's going to be seamless, I think is very, very naive.
Joe, what's the tailwind that the economy is getting at this point from the Fed policy remaining this easy? And I ask this as you talk about the Fed being stuck in a box and possibly not being able to raise rates.
I mean, the policy has basically been I'd argue the economy is pretty healthy in February 2020. We reopened. We got a V-shaped recovery. It was overlaid with tremendous fiscal stimulus. We've had now over $5 trillion of just COVID-related spending. The Fed's been real easy, and you've got this demand boom. Supply has been slow to catch up. That's why you've had the inflation. but the economy is, resurgent. There's just so much pent-up demand. It will moderate, but essentially it's an economy that I would argue if you leave it alone, it'll be fine. But certainly both dials, fiscal and monetary, are full tilt, and that's why the economy is improving. And it was generally healthy, so we're in good shape. I just don't see the Fed being able to do anything on the rate hike side. And if you got fiscal stimulus, it may actually, ironically, cause them to their ability to do anything that may fall even more. In other words, who's going to be buying all this debt if we get more stimulus from here, which is what the administration is trying to do.
How important is the jobs number that we're going to be getting tomorrow in order to determine Fed policy?
It's important in the sense that if it comes in softer than expected, and we're going to get a soft report sometime soon, it's going to squeeze the shorts in the market. You're going to see 2s, 10s flatten even more. But in terms of the bigger picture, I don't think the employment numbers matter that much. If it's weak, people will say it's because of labor shortages. I don't think it really matters. I think the inflation numbers are what's driving Main Street and what's driving most investment decisions. I don't think it's a problem, but I don't think employment's a big deal at the moment.
Joe, the equity markets, it's Chapter 23 of Mankiw, Chapter 23 of Krugman, Olivier Blanchard, whatever. How do you observe the equity markets in your economics, this run of a great bull market? How does it translate into Livornia economics?
I try not. You mentioned 3 people. One of them I definitely don't try to read. I won't say who that is. But Tom, it seems
shade there, John. Livornia, a little chippy this morning.
A little chippy this morning.
Think what he would say. Think what he would say about Catherine Mann.
Carry on, John.
Never. Very wonderful woman. She actually worked with my old colleague, Peter Hooper. But anyway, leaving that aside, on the equity side, what we've seen really is a tremendous increase in profitability. And that reflects the fact that while the U.S. has recovered, Tom, so has the global economy. I mean, even with the lockdowns, the sporadic lockdowns in Europe and the COVID cases in South America, we've seen the PMIs in Brazil, in the UK, Germany, Italy, France, Japan. They've all recovered. So it's been a huge global rebound. The S&P has significant exposure to the global economy with the U.S. booming. It's really been about earnings. And going forward, you have to assume that this performance is pulling from future activity. But Livornia Economics is, look, if there's no recession in sight, and I don't see one, even if the economy slows, rates stay low, inflation's going to moderate, and we're still going to get positive long-term equity returns, and we still have not seen the peak in stock markets. So I'm still an optimist. Larry Kudlow taught me well.
Joe, final question from me, and I won't go there either. In terms of this cycle, as it starts to really pick up, are you surprised that that hasn't engineered a weaker dollar?
A little bit. To me, there's been a lot of people have been very short rates. They've had curve steepeners on, and they've been very short dollars. So I think that's part of the reason why the dollar hasn't weakened much. And then peripherally, because the U.S. has sort of come out of this pandemic quicker than many of our trading partners in other industrialized countries, it's kept the dollar better bid than it otherwise would be, especially related to these massive twin deficits, the combination of the budget deficit and the trade deficit. So it doesn't totally surprise me.
Joe, it's good to see you. I miss the Kudlow
Thanks,
optimism.
guys and gals. Thank you.
It's great to get a flavour of it from Joe Livornia, Natixis economist of the Americas. Just a little bit of optimism there, Tom, about the future.
Well, it's an optimism on capitalism, and we're going to see it within corporations that can adjust. What I see there, John, that's so important is you have an economist, Joseph Livornia, and you got a market strategist like Anthony Dwyer over at Canaccord Genuity, and literally their language is the same. Where's the recession? Where's the slowdown? Keep on board. And we're hearing that from a lot of other people. I'm thrilled, John, that our team, I teared up at the team today. What a great second half kickoff with Liz Ann Saunders and Ed Yardeni.
Looking forward to that conversation a little bit later, but that's the bottom line. It's the simple cheap guide for many people, Lisa. The cheap guide as follows. If you don't see a recession on the horizon, keep buying.
Keep buying, and at what point, though, does this create a problem? At what point? And I'm sorry, I know you're going to make fun of me for being
We would never
gloomy,
do that.
but it's fine.
The floor is
look,
yours.
I'm okay with it. It's just that the question that I have is, if we don't get, growth exceeding 3%, how sustainable is the debt load that we're putting on? Look, I can bring the gloom, sure. I'm always trying to look around corners.
It's okay.
Okay, she's going to be John. She's going to be glooming out this weekend, and I'm going to have a case of PBR. We're going to call it the pendulum of PBR. John, do you know what PBR is?
Is that a beer?
It's a beer.
Is that a beer?
Is that a beer?
Is that a beer that
God, folks?
I don't
please,
want to drink?
Out on Twitter, would you please inform
Just confirmation
young
from the
Ferro
floor that
of the quality?
it is a beer that I. Thank you.
Pabst Blue Ribbon beer. Al, cancel the Narragansett. We're going Pabst Blue Ribbon
You're going
beer.
PBR beer.
Lose the Narragansett. I don't care about Tanglewood.
I give
and
enough
the Boston Pops. PBR
of
only.
a pendulum of gloom, and you will drink PBR.
I think I do a good enough job accommodating the doom and the gloom on one side and the I have no idea on the other side. We're going to talk about the pandemic next with Dr. Amber D'Souza, Bloomberg School of Public Health Professor of Epidemiology. Equity futures unchanged, 42.88 on the S&P 500. Record highs coming into Thursday and kicking off Q3. I'll have more than that, Tom. From New York City this morning, good morning. Could be another beautiful one. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. For the first time, a multi-year investigation of Donald Trump's company has resulted in criminal charges. A grand jury in Manhattan has indicted the Trump Organization and CFO Alan Weisselberg. Weisselberg has served the family for more than 40 years. He has now surrendered to authorities. Neither the former president nor his sons are expected to be charged. A federal judge has blocked Florida's new law penalizing social media companies for barring political candidates. The law was to take effect today. It was signed last month by Republican Governor Ron DeSantis. The judge ruled that the law violates the First Amendment and doesn't apply to all social media providers equally. And here in New York City, Eric Adams saw his lead over Catherine Garcia grow smaller in a corrected vote count for the Democratic primary for mayor. That came a day after the botched release of erroneous ranked choice voting results plunged the count into chaos. The race will likely be decided by a count of 125,000 absentee ballots. Activist investor Elliott Management is stepping up the pressure on GlaxoSmithKline. The firm called into question CEO Emma Walmsley's leadership of the British drug maker. Elliott says Glaxo needs to beef up the pharma expertise in its top ranks before carrying out plans to split into two. Fast fashion retailer H&M returned to profit in the second quarter. Sales rebounded as stores reopened and pandemic-related restrictions were eased. H&M says the third quarter started well and sales are almost back to pre-pandemic levels. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Sequencing the variants in order to understand the prevalence. For now, extremely low of the Delta variant, but we will continue to sequence and to pay a lot of attention to ensure we know and therefore we can respond. But the best cure we have at the moment is essentially to continue vaccinating.
That was Arancha Gonzalez Lea, the Spanish foreign minister, catching up with Bloomberg's Maria Tadeo from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Your equity market unchanged on the S&P 500 and a huge rollover, erasing the gains over in Europe. The stock 600 now flat, was up by close to 1% to kick off Q3. We erase all of that. Elsewhere in the bond market, yields unchanged, 147.47 on 10s, euro dollar 118.56, euro just very, very slightly weaker. Let's not even say that. Unchanged on the day. And there's the move in crude, Tom. We approach 75 on WTI, 74.93, up by almost 2%.
76 print right now. There it is, 76 print exactly on Brent crude as well. We'll watch that through the morning. To be blunt, Lisa more on top of that story than I'll ever be. Right now in the pandemic, and this is an honor, Amber D'Souza joins us from Johns Hopkins. She is definitive, I should say, in neck cancer and also infectious disease, a terrific career in medical research. Amber, when somebody mentions the Delta variant, the Delta strain, it comes down to every conversation is the infectious reality. Do you have an understanding of how communicable the Delta India variant is?
I haven't seen data yet to tell us exactly what the reproductive rate is, which is how many people each infected person is spreading it to, but we know that the proportion of people who are COVID positive that have this variant is increasing quite rapidly, which tells us it's definitely more infectious than the other strain.
On a log basis, looking at the exponential realities of bacteria and viruses, where does Delta fit in? Is it a normal log function, or is there something different to it where it actually curves on a piece of paper?
No, it's within the normal spectrum. This is what infectious diseases do. The more we allow an infectious disease to spread, we know it's going to mutate, and some of those mutations are going to be more transmissible. So this is within the sphere of what we've been dealing with in the pandemic so far. But if you imagine that the strains we were dealing with last year were infecting 2 or 3 people, and this one instead is infecting 4, 5, 6, 7 people, each infected person, we don't know exactly where we are there. It's just slightly worse, and it makes our battle against this just slightly harder.
That's where I wanted to pick up, Dr. D'Souza. How much has the Delta variant prolonged our fight to get to herd immunity?
Well, it really depends what happens in the next few weeks and months. Here in the U.S., the story is different than abroad. We are within grasp of herd immunity. We have made real progress. And, people are continuing to get vaccinated every day, even though it's at a slowing rate. So if we continue, I think we can reach herd immunity later this summer or fall. In the U.S., we are still on track. Things have just slowed. So it is possible, if the vaccination stalls, that we won't reach it through immunization. And the only other way to reach herd immunity is that the infection burns through our population and enough people become infected that they get immunity that way.
Dr. D'Souza, I think I might be slightly traumatized. I hear Tom Keene's voice in my ears saying, I don't know about herd immunity. What does this actually mean? What are we actually talking about? What are we talking about, Dr. D'Souza, considering the fact that a lot of people think that herd immunity is sort of fictitious in this kind of environment?
Well, what we're talking about is preventing people from getting sick. And there's 2 ways to do that, right? So the idea of herd immunity is if most of the people get vaccinated and aren't transmitting the infection because they're protected, then the other people who are not protected aren't going to get it just by chance because it won't be spread to them. So they remain susceptible, but, if we get to high rates of vaccination, say 75, 80%, then the people who are unvaccinated are just not going to get exposed. That is the idea of herd immunity. But of course, if they are exposed, they remain susceptible. So vaccination is the way to be safest, and those who are vaccinated remain protected, including against these variants. Data has shown that the vaccines are working against the Delta variant.
Professor, what is the ultimate goal here? To protect everyone, or to treat this like any other virus, the seasonal flu, say? What's the ultimate goal, the objective?
Well, we don't have to get to 100%, but the goal is to, in my view, to protect lives, not just from death, but also from all the side effects that illness can cause from this infection. And to do that, we have to get the bulk of people protected. So we've made tremendous progress over these next few months, but we're not there yet. We could still have additional waves of infection at our current vaccination rate. They won't be nationwide, and they won't be as bad as what we saw before because we do have high vaccine uptake among our oldest individuals. So we know we will not experience what we did last year, but we could still have localized waves. There are states where only half of people are vaccinated, and they could still have, huge surges. The hospitals aren't going to be overwhelmed, but there still could be quite a few people getting sick and dying, in those states where vaccination.
Well, Doctor, I understand why people don't like to ask these questions, because being seen on TV asking these questions is sometimes not very nice, but that's part of the job. Mm-hmm. I don't remember that being the objective 12 months ago. And we live in a country in America where you have the luxury of getting a vaccine if you want one. So why does the rest of the country need to worry about the few that are deciding, I'm not interested, I don't want one?
Oh, interesting question. So my answer to your question is from a public health view. I'm concerned about everybody's health in the public. But you're right. Once you're vaccinated, you are protected. You can travel on a plane. You can, be unmasked now in most areas according to our laws. Why do you need to worry about everybody else? Well, it affects our economy. It affects health costs. I mean, what happens to other people does affect us. So it is a personal health decision whether or not to get vaccinated. I believe there are still lots of people who haven't gotten vaccinated, not because they are against the vaccine, but because it needs to be easily accessible. There needs to be an incentive or a reason for them to get vaccinated, and we can still reach those people and get them vaccinated. Other people who feel strongly that they don't want to get vaccinated, that there are people who have that view and will choose not to get vaccinated, and we'll see how many that is.
Delicate issues, I know. Doctor, appreciate your time. Really do. Dr. Amber D'Souza there, the Johns Hopkins Bloomberg School of Public Health Professor of Epidemiology. I want to turn to this market. WTI with a 75 handle for the first time since October 2018. Here's the price action right now on crude, up by a little more than 2% on crude right now. We advanced $1.50 to 74.98, just south of that line in the sand. We did break it, Tom, briefly, 75 for the first time since 2018.
Spread comes in. WTI very close to that 76 level on Brent crude, the global price, John, as well. It's just one indication of inflation. I'm watching DXY at the same time for a dollar breakout. We've had that in the last 24 hours, but maybe we get it again here with DXY 92.44.
Lisa, this is after a 50% plus move through the first half of 21.
And it comes on the heels of news that Saudi Arabia and Russia have reached a preliminary deal on raising production that's below where people thought through the rest of the year, so less supply than could potentially be brought back online.
TK, there was a yeah. Usually that's followed by something really important.
John, the Twitter is heated up. We need to inform Mr. Ferro the availability of the 1,776 pack of PBR.
Nice.
John, you get the linkage there into 1776.
Thank you, Tom.
It's when the colonies said
perfect
no.
This morning. Lovely.
George Washington went across.
As this global recovery is unfolding, investors need to think more global in their portfolios as well.
There's quite a bit of momentum, and it's going to spread out into 2022 and 2023.
You may even start to see some deflationary forces kind of work their way back into the system.
The Fed now needs to transition and think about risks of higher prices, higher inflation.
The pressure will grow on the Fed to announce QE tapering. I think the debate at the Fed is shifting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Welcome to Q3 from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Equity futures in a single point on the S&P, 42.87 on the S&P 500. Tom Keene coming into Thursday. 5 days of gains, 5 months of gains, 5 quarters of gains.
It's going to recalibrate right here with claims today, jobs tomorrow, and then on to the earnings season, John. And I'll tell you, this interview we've got coming up with Mr. Skelly of Morgan Stanley is important. Their note is blistering as they push against the gloom crew.
Well, let's get to the labour market. We're looking for a little more than 700,000 in payrolls tomorrow morning, Tom. At the top end, 1050. At the bottom end, 400K. I believe Morgan Stanley in at around 600,000 going into tomorrow.
I'm going to look at wage gain. Morgan Stanley, and I'm getting out front of our conversation with Dan Skelly, but they look for, quote, wage gain potential, and that would be something that would really push against the gloom.
Always looking for balance here, aren't we, Tom? Just a little bit of optimism mixed with, Lisa, just a little bit of gloom.
All right, listen, let's talk gloom crew, okay?
Please.
Gloom for who? And this, I think, is key because, honestly, pushing back perhaps a bit against the gloom around the economy, talking about higher wages. But what does that mean for companies, especially if that eats into margins? Can we get economic growth and, frankly, a much brighter outlook for the economy that doesn't necessarily bode as well for riskier assets? And I think, John, that is the discretion here that we need to be very clear about.
Can you do the weather again? I love that. It's deadly out there.
Well, we were talking about the heat. We were putting it into perspective, and it's...
I know.
It's serious.
You're making a good point. I'm just joking.
I know.
Equity futures this morning, down 2 on the S&P 500, 42.86
Lisa,
on
John,
the S&P.
Folks...
You're going to let me carry on,
No,
Tom?
I'm not. This is important. This is more important.
74.92
on July 1, 2021, John, when did you first experience air conditioning? Were you 25 or was it 27?
When I moved here, because let me tell you, in the south of Italy, growing up, when I spent my summers there was no air conditioning. It was the window with a mosquito net. And in the UK, Tom, summer's 2 weeks. It's just 2 weeks, and it falls somewhere between June and August, and you don't invest in aircon for a 2-week summer.
It sounds like Rochester, New York. Continue, John.
Thank you, TK. 74.92 on crude.
The good today.
We had a little look at
for the
75.
second half, we got a new bottle of Tang.
Judging by the last hour, that is not Tang. 147.81 on 10s. Yields up a basis point. Lisa, euro advancing, euro dollar 118.68. Positive about 0.1%.
Perhaps just bringing things back to a less gloomy look. For the day ahead, 8:30 a.m., we're getting U.S. initial jobless claims. The expectation is for it to be a new post-pandemic low, 388,000. I am going to be culling the data to see what effect the end of some of these enhanced unemployment benefits may have to push people more into the labor market. Very messy data, very politicized. However, something that definitely will be a talking point going forward. Also today, OPEC Plus is meeting to consider output boosts. We have already heard reports that Russia and Saudi Arabia have formed some sort of agreement about raising production. It has raised prices of oil to the highest since 2018. Why? Because these production increases are not as big as many people thought. That is the early reporting. We will get more throughout the day. And today, U.S. auto sales are going to be released for the month of June. The expectation is for this actually to be lower. Fewer cars sold. Why? Not because of lack of demand. It's because of lack of supply. It's because of the chip shortages that leave a lot of dealer lots less stocked than they have been for years, John, and it really has raised prices astronomically. I mean, if you look at some of the increase in prices, I mean, $40,000 for an average car.
Do you think we work some of those issues out in the back half? GM had a wonderful start to the year, up by more than 40% year to date.
Well, and this is because they are earning a lot more money because of the prices going up as much as they have. However, the guidance has been from the C-suite that it's going to take a while to really work through some of these kinks. So I don't know. I think it'll be interesting to see what guidance they give.
Dan Skelly joins us now, Morgan Stanley head of equity model portfolio solutions. Tom had a little promo for Dan earlier. Morgan Stanley as a house over the last year pushed back against all the gloom. They were out front on this sharp, quick, strong recovery. And Dan, I wonder, and good to see you, by the way, whether you remain committed to that story.
Likewise, great to see you, Jonathan and team this morning as well. Thanks for having me. And the answer is yes, we are still committed to a longer-term bull market, a secular bull trend. That being said, we think in the near term, specifically over the next 3 to 4 months or so, as we get into the summer months here, we think we're due for a pause or a pullback. And you've seen that, right? The last 6 or 7 weeks, the market has struggled to really break above this 4,200 level on the S&P. And I think what the market is starting to recognize is that all of the good news can't be good in every single way. And specifically, as you called out earlier on the show, we are seeing rising cost pressures. And we are concerned in a way that the market is not, that some of the labor costs and the rising wages may be more sustained than people think.
Dan, your note is blistering. It's the most optimistic long-term note I've seen. The only thing even close is Folkers Landau over Deutsche Bank. I want you to tell me what the Shallot-Skelly 2026 looks like. We don't do that enough on TV. We don't go out 5 years. What does your 5-year look like for equity markets and total return?
Yeah, so we're assuming that markets continue to struggle in the near term, literally over the next several months, but that we're making new highs next year, Tom, and into the 2026 kind of region as well. And listen, I think the genesis for that outlook is as follows. Number one, when you think about the strength of the consumer, unlike 2008, which we saw the recovery kind of basically impeded by a weak consumer and by a deleveraging in the consumer, this time around, we're seeing a very strong consumer. And we're seeing that manifest in areas like housing. Yes, housing may slow from its robust levels and red hot levels of the past year with the pandemic, but that's still a multi-year trend, Tom, that we see giving strength to the economy and to markets going forward. Next, thinking about demographics, look, we think any pullbacks or any pauses in the market could be short-lived and shallow. And one of the reasons for which is we have a whole new generation of investors coming into the equity market after 10 years of really trying to restructure their personal balance sheets. The millennial generation is in very good shape. And after having delayed many of the adult things they had put off, such as starting families, buying houses, investing, they're now starting to do all those things in size. And the very last thing I'll say, Tom, which is kind of unique unto this cycle and recovery path versus previous analogs is think about everything going on in corporate CapEx spending and digital transformation. We've all talked about this. Your show has highlighted this. COVID was a massive digital wake-up call. And unlike previous downturns where CapEx spending and research spending really never recovered or became a positive catalyst, we actually see that as a key driver going forward. And we see that as a positive net catalyst to economics into the market.
Dan, I got to say, there's a lot packed in there, including calling millennials, saying that they are now starting to do adult things, which I thought was a fantastic little aside in there. You said that we're due for a pullback. In what, though? Because we've seen this rotation back and forth, and recently it's been back into growth and away from value. Where is the pullback going to be concentrated in the next couple of months?
It's a really interesting question, Lisa. And what I would highlight there is I think what the market has signaled in the past couple of weeks here will probably continue. So I do think there is a realization here that the comps, that the earnings revisions are starting to plateau and starting to roll over. And with that, the cyclicals and some of the higher beta materials and energy that have led for so long, really since the vaccine news last fall, I think those are some of the things that could lead to the downside. And I think some of the things that are starting to pick up steam a little bit, some of the higher quality tech names, some of the communication names, some of the potential defensives, I think those are clearly going to be more defensive to the downside here in the next several months.
Dan, we're always talking about the nuance involved in the call. What you just said was really refreshing when you talked about that new cohort entering the equity market, because a lot of people have been snarky about some of the new entrants to investing. And you're not talking about a handful of names. I just wonder, though, Dan, the new cohort, the new money that's arriving, how are they investing? Is it passive and through the index level? What are they doing? What are you identifying?
Yeah, Jonathan, we're seeing a lot of very interesting trends. And as you know, as the world's largest wealth manager, we have a particularly unique vantage and sort of line of sight into this trend. So I'll say two things. First, number one, this trend is very similar to what the boomers went through when they started to first reach 40 in the mid 80s to late 80s. They too were underinvested. They had about 6% of overall asset allocation in equities. And what you saw over the next, call it 5 to 10 years, is the boomers started to become more fully invested. They had upwards of 30 to 40% of their asset allocation in equities. Same trend today. When I look at the millennials, about 5% of that cohort is holding equities. And again, we see that percentage increasing substantially over the next several years. In terms of how they're investing, Jonathan, clearly impact and ESG is one of the key trends that we want to obviously look for smart investments that are aligned with our values. So that is something Morgan Stanley has certainly invested in and led the way, and I would argue in the last decade or so. The other thing I would say is index investing, to your point, looking for different types of economic trends as well, or economically feasible investment trends. That's another thing we've seen.
Hey, Dan, good to catch up. As always, Dan Skelly,
My
Morgan
pleasure.
Stanley Equity Model Portfolio Solutions Head. Tom, just a little bit of insight, a line of sight into what's going on at the moment, some new entrants in this market over the last 12 months.
The tone of the note, and of course, folks, that's the theme on it. July 1 is they've got the courage to go out longer. I think, and I don't want to link the two together, but John, Doug Cass was a piñata over saying Amazon out to 5,000, which from here is about a 7% gain out to 2026. And we don't do that enough, John. We don't get the vision out 2 years, 3 years, 5 years. And Lisa Shallot and her team have, the courage to do that.
Not a single sell on Amazon. Not a single hold on Amazon. There are 55 buys on Amazon. And the 12-month price target, Tom, 42.50.
Yeah, I mean, Cass may be short Amazon now like he's short the Yankees, but out longer, he goes longer.
Did you
John,
just throw
very
shade
quickly,
at the Yankees?
Yes. Yeah, official John Nuno signs with the Tots. He spurns AFC Richmond.
Thank you, Tom. Keep those football updates coming.
Thank you.
Is that confirmed, just in case there's some real Spurs fans out there?
Twitter. It's out there. Tottenham Hotspur.
Okay.
Spurs official.
All right.
I got a heads up.
In the next hour.
I knew it was coming.
Ed Yardeni, Yardeni Research President.
I talked to Harry last night.
Tom, I've worked with you for so long, I still don't know whether it's true or not when you speak.
You sound like an ex-wife.
42.89 on the S&P. Heard on radio, seen on TV. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The Trump Organization's longtime CFO has surrendered to authorities in New York. Alan Weisselberg faces tax-related charges. So does the company itself. It's the most direct attack on Donald Trump and his company to emerge from a years-long criminal investigation by the Manhattan District Attorney. The White House is ramping up pressure on Republicans opposed to that bipartisan infrastructure agreement. Starting today, the administration will spotlight crumbling roads and bridges on a state-by-state basis. The new funding could be used to rebuild them. China's President Xi Jinping sounded a defiant tone today in a speech marking the 100th anniversary of the country's Communist Party. Xi called China's quest to gain control of Taiwan a historic mission, and he warned that the country's enemies will break against a, quote, steel Great Wall. Citigroup CEO Jane Fraser says that almost all of the bank's employees will return to the office. Still, she says there will be a blended approach that allows for some flexibility. Earlier this week, Citi said that its policies allowing some work from home would give it a competitive edge in recruiting and retaining top staff. Robinhood reportedly plans to set aside as much as 35% of its shares in its IPO for individual investors. That's a bigger percentage than normal. Dow Jones says the stock trading app wants people to sign up to buy the shares on its new IPO platform. Retail investors are largely shut out of IPOs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
There were lots of young leaders, the next generation of financial services leaders in the audience, and I was speaking to them after the event. And you talk to all of them, they are all super excited to get back into the office on a more full-time basis. I think it's very important for young people at the start of their careers to have all those benefits. You know, and I hope as we make progress towards our July 19th step and safely take that step, we can get the city humming back to life as we all want to see it.
That's what we want to see, the City of London getting back to it.
On radio. Wow.
Isn't it beautiful? Rishi Sunak there, the UK Chancellor of the Exchequer, catching up with Anna Edwards a little bit earlier this morning. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Equity futures right now, 42.89 on the S&P, unchanged on the session. In your bond market, 147.47. Yields higher by almost a basis point. It gets your attention, 75 on WTI, the first time we've seen that since late 2018. Crude advancing, Tom, by 2.3%.
Very cool. Right now we're going to digress again. Yardeni and Saunders coming up with us on the equity markets here in a moment. What you don't know is here at Surveillance, we have hardwired in red phones by our bed. My phone rang at 12:43 a.m. It was Ferro on the phone. Look at the rank numbers on the mayor's race, because those numbers came out late last night. Shelley Banjo drives all of our coverage on New York City and, of course, running the shop here at 731 Lexington. Shelley, I want you to take the observation that Garcia, sanitation engineer, really came up nicely against Adams, a former police officer, but bring it right forward to 125,000 absentee ballots. Can you go through that exercise?
Yeah, so what we're waiting on now is to see this pretty big proportion of votes that we're waiting on, about 14%, to see who came in for whom. And if it mirrors what we've seen so far with Election Day, then what that means is it could really tilt it for someone like Catherine Garcia. But in the end, after you do all those tabulations that we got last night, the difference between Wiley and Garcia was only a few hundred votes. So the absentee ballots could actually also change it for Wiley as well.
Well, I'm assuming, folks, this is Adams, the former police officer, Garcia, the sanitation engineer, Miss Wiley working for Mayor de Blasio. Fine. Is Wiley still in the race, or is it a 51-49% race?
So the issue with what the data that we got yesterday was that it was just based on Election Day and early voting. So Wiley's still very much in the race. She's not going to drop out. She's saying we're going to wait until all the absentee votes are counted.
So what is the daylight between a Mayor Adams and a Mayor Garcia, Shelley? Just zooming out a little bit.
She cannot hear you. Let me ask the question for you right now. Lisa does that. She's from the Upper West Side. You can't understand her because of the accent. She wants to know what the difference is right now, the delta between Mayor Garcia and Mayor Adams.
So what happens with the ranked choice voting is they tabulate it all the way to the end. And so right now there's just about, once you count all those votes, there's just a 2-point lead between the two of them, which is just not less than a 2-point lead, actually.
But you just told me Wiley's still in the race. How can that be?
Because all it was yesterday, the release was, an exercise of what the outcome would have been if the absentee votes weren't included.
Do you know who are the absentee votes? Are they people that were heading out of JFK on some fancy business trip? Are they, what's the character of those people?
It's pretty distributed around the city, but if you mirror the districts that are absentee and the districts that voted in Election Day, about 44% of those had gone for Adams. So, it depends if people end up voting absentee the same way they voted on Election Day.
I believe Lisa Abramowicz is with us now.
Yeah, with my horrible accent. There's a question, Shelley, going forward about whether you're expecting to see any kind of surge in the Republican candidate, or is this just going to basically be a Democrat-only kind of race the way we've seen in New York City traditionally?
Because there's about 7-1 Democrats to Republicans in New York City, and the Republican candidate that has won, Curtis Sliwa, is not, a more moderate candidate that could appeal to a lot of people.
We haven't gone there yet. We're going to stop the show here. And for those of you internationally, it's real simple. Where's the romance of John Lindsay? What happened?
Yeah, the city, people could complain about that there's tens of thousands of Republicans that actually re-registered in the city ahead of this race as Democrats, even though they voted Republican.
They couldn't find a John Lindsay to run?
Well, yeah, that's the issue for the Republican Party in New York, is that New Yorkers, there's a lot of moderate and Republican New Yorkers. They just don't find the candidate that they want to vote for.
Did they go for Mr. Adams then? I thought the coverage, and I thought Tom Edsel in the New York Times yesterday was absolutely brilliant, breaking it down by boroughs as well. Let's take it nationally. What does it symbolize for the Democratic Party nationally?
I think nationally the issue is pay attention to crime. And, President Joe Biden has realized that this is an issue and has been addressing it nationally, but in the midterms, this is going to be an issue. Crime is up in cities across the country, and it's going to continue to be an issue.
What's your date on this? When do we get absentee ballots?
So I think the date to watch is Tuesday. So we'll come back from the holiday weekend in the U.S., and Tuesday we'll get a new batch of data that will most likely include the absentees. And even if the Board of Elections doesn't call it, the AP might call it on Tuesday.
Can you come back on Tuesday? Maybe Lisa can talk to you?
I'm here for you.
Okay. Thank you,
Shelley, thank you. I'm not sure if Shelley can hear me, but thank you, Shelley. Shelley Banjo, our New York Bureau Chief. Can you thank her, Tom?
Yeah, thank you. Mr. Farrow thanks you as well. Lisa doesn't thank you, but John does.
This is just high-end radio and TV, isn't it?
Shelley's like, I'm staying in print.
Good idea. 75.15 on WTI. Crude advancing a little more than 2%. Here's the debate with OPEC Plus right now, debating 400,000 barrels a day of monthly output hike from August to December. They're debating extending this production deal to the end of 2022 as well. Just a couple of headlines coming from a delegate of OPEC Plus, Tom.
Yeah, it's important. I think Anne-Marie Horton's in Washington now. So Lisa, I see Lisa in Vienna.
I see that.
I see it.
I see that.
I'll head over there.
Then you can go to the Austrian Central Bank too. They might be aligned with your views on monetary policy as well.
They could clip the coupons on my 100-year paper.
Look, with respect to oil, this is actually important. The 400,000, just to put into perspective, is well below the 500,000 or more that was expected in terms of increased production, which is the reason why you're seeing a boost to oil prices. Basically, less supply than could potentially have come back online, John. So just to give a little perspective there.
Yeah.
But it's really a delicate dance, especially because you don't want to push people further into EVs and renewable energy by allowing prices to go too high.
John, we got to rip up the script. Translate what in God's name is going on in the United Kingdom.
Well, I'll do my best to translate, Tom. I'll just bring the headlines first. This from Prime Minister Boris Johnson. Extra precautions may be needed after July 19th. July 19th is the line of the sand for anyone in the UK right now. The Prime Minister saying the government may keep some COVID precautions. This is an interview conducted in the UK. In the last couple of moments, the headlines have been released. We will set out details in the next few days on the pandemic. Tom, we talked about this about a week ago. overwhelmed, overcome by events. And the Delta variant is really shaking things up in the UK. The good news so far is that even with this explosion in cases, if you might describe it that way, we haven't seen the same move in, say, hospitalizations, and certainly not deaths either.
Just interesting to see nation to nation, even the struggling nations like the Philippines, South Africa and such.
Yeah.
Just every story is different.
We should frame that last 5 minutes on this show. 42.89 on the S&P. That was special, wasn't it?
Puppy. Have a PBR, John. We'll
Bottle
go down
that
to
up.
1,770.
Yields 147.47 on TV and radio. This is Bloomberg. From New York City for our audience worldwide, live on TV and radio, here's the price action this Thursday morning. Equity futures 42.89 on the S&P, advancing a single point. On the Nasdaq, pulling back by 22. We're down by a little more than 0.1%. I wanted to talk to you about confidence. This is not a therapy session, don't worry. I want to talk about confidence in this market, confidence in the C-suite. And I think one of the most important headlines earlier this week came from United Airlines, ordering 270 jets. That, Tom, shows you confidence to the C-suite that things can get back to normal sometime soon. I'll show you something else that shows confidence. Switch up the board and get to the labour market. This is a story of job openings in America, north of 9 million. Now, a lot of people have used this data point to say, look at this big gap between supply and demand right now. I think the demand tells you something about confidence. And what you notice about every single recovery, every cycle, is that job openings keep climbing through the recovery. Confidence. Finish on this. The quits rate, confidence, sky high. In the bond market, do we start to see those signs of confidence? Subhadra Rajappa of SocGen has given us the forecast. She's looking for a move back to 2% on a 10-year. By year end, we're at 147.81, and back to 0.1% on a German 10-year. Right now, we're negative 18 basis points. That's the kind of confidence that we see in the C-suite, we see in the labour market, and not just the employers, but also the employees who are choosing to quit their jobs. Will we see that confidence slowly reflected again, Tom, in the bond market into year end?
Well, it's the dynamics of the bond market. And again, I'm going to go to the spread market. Lisa's smarter at this than I am. But, you know, I got an immovable real yield. John, are you doing the real yield tomorrow?
I will be doing the real yield tomorrow.
4th of July real yield.
Fortunately, Italy will be playing at 3 p.m. Eastern time.
Right.
And Bloomberg real yield is at 1.
And in England, Ukraine on Saturday.
There
for
we
the
go.
folks you want to watch the real yield over the weekend as it plays, real value add is well.
Like the show, Tom. That tangent.
Yeah, you know.
Super value add. I think Taylor Riggs is standing by patiently. She got up early for us this morning, Tom. Let's head over to Taylor now and get some movers. Hey, Taylor.
She only does tech stocks.
Let me try to give you some value add, John. This time, of course, within the chip shortage space. Yesterday, after the close, some really interesting news within that chip space. First, of course, coming from Micron. Now, the earnings a little bit of a disappointment, but analysts still really, really loving this stock. In that press release, we also got some other really interesting news as it relates to selling their Utah factory to Texas Instruments. Now, analysts really liking this deal for Texas Instruments, saying that they're really positive. Oppenheimer saying that this will boost the company's domestic manufacturing. Susquehanna noting that this really shows the size and the extent of some of those chip shortages. Texas Instruments really trying to get ahead of that with this deal. Chip stocks, as you can see there, not reacting really positively on what analysts are describing as a positive deal. Let's change the board and hope that we can get some green on the screen. First, of course, coming from General Motors, we might get some of those auto sales this morning. So keep your eye on what might be a good second quarter report from that. Of course, the big news, WTI at $75 a barrel. So look at the read-through that we're seeing with some of these other stocks. Occidental, ConocoPhillips, Marathon Oil, UBS this morning, upgrading Marathon Oil to $16 from $11 a share, Tom.
Taylor, thanks so much. Greatly appreciated. It is July 1, and we need to look forward as we look back as well. We start strong with Liz Ann Saunders of Charles Schwab, of course, with her wonderful work. Liz Ann, I love what you do on Twitter. It's a brief for the world. Really wonderful proprietary stuff as well. And, of course, Liz Ann Saunders, always bold, says past performance is no guarantee of future results. Okay, Liz Ann, go there. What do our future results look like?
So I think that the bond market continues to be probably the most important signal for the equity market, not just in general terms about what the 10-year yield says about inflation risk, but leadership has really keyed off what's going on in the bond market. And I think that will continue to be the case. And I think if we do get another leg up in yields, then you probably see more of this rotation back toward some value factors. Obviously, the latest trend has been more toward the growth factors.
Right. Lizanne, this is a really important question. I mean, I have great respect for the idea past performance is no guarantee. But the way you solve that is to take a longer-term view. The markets today and the modern social media and all the analysis is a long-term view of, let's call it 3 weeks. What's your view so you get beyond the stress of past performance is no guarantee?
Well, I think what's key right now, and I don't know that anybody knows the answer to this, is did the pandemic just sort of pause the cycle that was in play both on the economy and the market up until February of last year? Or did it end one cycle and start a new one? Because where we are, in particular in the economic cycle, whether or not it was just put on ice and we're back could mean that we're much later in the cycle. Or did we really just end the prior cycle and start a new one? Then I think we have a much longer runway. And I think we'll start to get answers to that in the next few months when we move past the base effects in terms of both economic data as well as inflation data.
So, Lizanne, you think that inflation and in terms of just sort of GDP figures, that will sort of give us a sense of where we are in the cycle? Is that what you're saying?
Well, I think we have to get into early fall. We've got September is really important for a lot of reasons, not least being the full expiration of the enhanced unemployment insurance in states that didn't end it early. Hopefully everybody's going back to school. The churning in the labor market. Before you brought me in, you were talking about the massive surge in quits and hiring, but there's a mismatch. And I think some of the funkiness in the data, the base effects associated with inflation, some of the seasonal calculation problems within the labor market data, I think start to ease as we get closer to that early fall period of time. And I think there'll be just more clarity starting at that point on many of these metrics.
Lizanne, a lot of fund managers do not have the luxury to wait for clarity before they make a move. And there's a question of how to double down on a position when there is such a murky backdrop, when people are waiting and will continue to wait for months on out to determine where we are in the cycle and what the forward look in inflation is. So, Lizanne, what are the balance of risks here? How are you positioning heading into the next couple of months?
I continue to think the factor decision is probably the most important, even beyond decisions around style indexes or sector decisions. In fact, what a lot of people don't realize in the midst of this growth versus value debate is that if you screen within sectors, regardless of sector, for value factors relative to growth factors, the outperformance of value, so to speak, over growth is actually higher in the growthier sectors like communication services and consumer discretionary. So you can actually, when you say, and I believe you want to focus on the factor of value, that shouldn't limit you to utilities and energy and the classic sectors that are in value. In fact, utilities are quite expensive right now. They're still housed in the value indexes. So I think you can focus on value, which I think is important in a rich market, but don't put blinders on in terms of where you look for that value. You can even find it in growthier parts of the market.
This is a really, really important discussion, folks, about sector analysis and the gammas, alpha, beta, and all the Greeks, rather, alpha, beta, and as Ms. Saunders says, the factors that are out there. Lizanne Saunders, is earnings a factor, or am I too quaint?
No, it's a factor. I mean, long-term earnings growth is a classic growth factor. And, specific to earnings, since we're a week or two away from starting to see second quarter earnings in earnest, I think that the most important focus within earnings season is maybe not on the actual EPS growth number, but profit margins and what companies are saying about the stickiness of wages, whether they're passing on higher input costs because that's the big unknown right now. And I think the profit margin piece of what we start to hear from companies will be in more focus than is typically the case.
We started the conversation talking about how the bond market has signals and is speaking loudest. How much is it signaling something that is a lot less optimistic than what you're talking about? How do you dismiss that message?
Well, if it's simply a message about inflation being somewhat transitory, to use the Fed's terms, that's not a bad environment if we don't lose the growth piece of this, too. And, what a lot of people don't realize is that inflation in a low-growth environment is pretty toxic to equities. But rising inflation in a strong growth environment is actually not a bad situation. So this focus on inflation in a vacuum without understanding the growth backdrop, I think misses the distinction between an inflationary sort of boom and then an inflationary bust.
That's a really important final point, Lizanne, and we've got to leave it there. It's always great to hear from you. Lizanne Saunders there, Charles Schwab, Chief Investment Strategist. Looking back at the past month, I want to pick out one sector that's really struggled, the airlines, down by more than 11% through June. And we're getting some headlines from the Prime Minister's spokesperson in the UK, who has briefed reporters and says that Prime Minister Johnson and Chancellor Merkel will discuss international travel Friday, tomorrow, that they're in talks with the EU on vaccine certification. The Prime Minister earlier this morning repeating something he said before in the last week, that the double vaccine doses will be a travel liberator. Here we are in July 2021, Tom, still trying to figure this out.
Yeah, and what's so important here is what matters. And it doesn't matter what I think or John or Lisa thinks or any of our listeners or viewers. The medical pros say all that matters is double vaccine. I look at two statistics every day, John, on the cover of the Washington Post, percent vaccinated. They got a nice, cute bar chart, 45, 45.1, 45.2,
Yeah.
and we got to do that onward, and there's something else at the FT. I look at the bottom line, John, it's just about getting vaccinated, and all the corporation and governments are going to line up for this to get things going.
It's far more nuanced than that, unfortunately, and as an example, I'll make it personal. My family, for instance, right now, my mom has had the Pfizer vaccine, double-dosed. My sisters have had the AstraZeneca vaccine, double-dosed. So even if the United States opened up travel for them to come in, and they can't come in right now because they don't have a green card and they're not a citizen. Tom, even if they could come in, the AstraZeneca vaccine has not been approved in the United States of America.
Yep.
So who do they let in? Do they let people that have had a double dose of Pfizer? Do they let people who have had a double dose of Astra? This one isn't clear cut at all.
Okay, I'll go with that. But to the point, and John, I think you said this in the vicinity of a year ago, let's go.
Oh, totally.
And we're unable to go because we're afraid of hurting a select group of people's feelings. And in the meantime, we've cratered international travel.
And the new concern, Lisa, is the Delta variant on top of all of that.
Yeah, although if people are protected with the vaccinations, why not just allow people in, because it's already circulating pretty much everywhere.
I'll tell you what I really think in the commercial break. Coming up, 8:30, Constance Hunter, KPMG Chief Economist from New York City, 42.93 on the S&P, kicking off Q3. Good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. For the first time, a multi-year investigation of Donald Trump's company has resulted in criminal charges. This morning in New York, the Trump Organization's longtime CFO, Alan Weisselberg, surrendered to authorities. He and the company face tax-related charges. Neither the former president nor his sons are expected to be charged. A federal judge has blocked Florida's new law penalizing social media companies for barring political candidates. The law was to take effect today. It was signed last month by Republican Governor Ron DeSantis. The judge ruled that the law violates the First Amendment and doesn't apply to all social media providers equally. And in New York City, Eric Adams saw his lead over Catherine Garcia grow smaller in a corrected vote count for the Democratic primary for mayor. That came a day after the botched release of erroneous ranked choice voting results plunged the count into chaos. The race will likely be decided by a count of 125,000 absentee ballots. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
expect this rise in inflation to be a temporary feature of the bounce back. It's important not to overreact to temporarily strong growth and inflation to ensure that the recovery is not undermined by a premature tightening in monetary conditions.
That was Andrew Bailey there, the Bank of England Governor. Tom Keene, were these the Mansion House speeches today? Already, is that what Mansion House looks like these days?
I don't know. I just can't. I conflate it with the 4th of July, and the two don't conflate.
They don't go together. Tom Keene, Lisa Abramowicz, Jonathan Ferro. This is Bloomberg. Your S&P 42.93 on the S&P. Your bond market 147.64. Yields are higher by about a basis point. Euro dollar not doing much this morning. Firmer euro stronger 118.73. Crude gets your attention. It now has a 7 and a 5. 75.29 on WTI. We advanced, Tom, 2.46%.
It's a thoughtful data check.
Thank you, Tom. I appreciate that. Thanks.
Watching 2's
I'm pleased we're getting on.
Under 120 basis points would be a big deal. Ed Yardeni's going to be with us here in 11 minutes. You're going to want to see that as we frame for July 1st. Right now, we reframe to the relationships of the market and all of the bond vigilantes of Mr. Yardeni. We talked to chart vigilante David Wilson here. And you're looking at tech stocks.
Right, looking at the relationship between specifically the S&P 500 Technology Index and the 10-year Treasury yield. It's a comparison that Liz Ann Saunders over Charles Schwab made on her Twitter feed earlier this week. Yeah, I mean, she puts out a lot of charts in the morning. They're pretty insightful. And this one kind of got my attention because, you know, what we're seeing lately in terms of this relationship is very different than what we've seen over the past couple of decades, more reminiscent of that dot-com era in the 90s, where in fact, you are seeing a negative correlation between tech stocks and bond yields. You know, looking back 200 trading days. So you're getting a better part of a year as far as that goes.
You can call your chart buy, buy, buy. Are you channeling in sync here? Is that what you're doing?
Something like that.
It's great. I mean, I love how you're taking it back to in sync, and that takes us back to 2001. Is there 2000, to David Wilson, is there a 2001-ish element to where we are right now?
Well, you could argue, at least in terms of this correlation, it's more like where we were before 2001, because you're talking about the most negative the correlation has been since October 1997. And we were in the middle of the dot-com era back then. You know, tech stocks were just taking off, and, you know, whatever was going on in bonds didn't seem to matter all that much, you know, because there was so much focus on the development of the internet. And we're kind of back there to some extent now. I mean, certainly people have tried to make that comparison between, you know, the current surge in tech companies in the broader sense, not just the ones in the technology index, but, you know, where we were in the 90s.
Dave, this is a totally different period than the 1990s and the early 2000s, because what we're looking at are companies that are behemoths of cash production. They are generating so much cash, they don't know what to do with it. They are basically the sizes of medium-sized nations here based on the cash generation that they have. The reason why they have been correlated negatively so strongly with yields is because they are havens, right? So when yields go down and people have a less optimistic look on the economy, they go into tech stocks. At what point does that cash generation give them a boost, even when Treasury yields, or if Treasury yields ever rise? I mean, how much are you starting to see a little bit of a fissure around this connection?
Yeah, I mean, that's kind of where we are now to some extent, Lisa. I mean, the way that things have changed in terms of this relationship, you know, because there was a whole school of thought, you know, that Treasury yields were going to go up and tech stocks were going to go down. At least in the past couple of months, that sort of popped up. And that would imply what we're seeing in terms of a negative correlation is going to pan out. But it really hasn't happened to this point. You know, it's interesting how things have shifted. You know, tech stocks showing more strength, and, you know, Treasury yield kind of stalled out at this point.
David Wilson, thank you so much on the correlations there. Buy. John, you know, I mean, frankly, and you make a joke about it, but the bear market crew is going to be showing the door here.
Just in the interest of accuracy, Buy, a song by NSYNC released on January 18th, 2000. just a year ahead of when you said, Tom. Just to be
Well,
clear,
that's
just,
okay.
in,
No,
just
but-
in case
but-
there are some diehard fans who were very interested in the third studio
but John,
album, No Strings Attached.
I'd heard it 4,322 times between then and
bet you
March.
did.
I know that I can't take no more. It ain't no lie. I want to
Nice.
see
Hold on a
you
second.
out that door,
Nice.
baby. Bye, bye, bye.
The Google searches on this show.
That's
I
good.
feel like they should have their own Twitter page.
This is what's special about
No,
this
but
show,
you got
Lisa.
some bear
Surveillance Google
markets.
search.
You got a bear market strategist who's
Insane.
being read this tune this morning.
Bye,
I
bye,
want to
bye.
see you out that door, baby. Bye, bye,
Well, there's
bye.
always career risk involved, Tom, and you're right. And I believe that
day.
period is a fantastic example of career risk as
really
well. But if you
It's
called the
career
bubble
risk.
too early, this is too, Lisa, you're right. If you called the bubble too early, you got in trouble. That's always true, Tom.
I'm just thinking about the tech people on that disastrous interview with Shelley Banjo. You
How
talk
they
about
feeling?
career risk.
About 30 minutes ago.
Yeah,
I'm
the
sure they're
audio,
okay.
you know, we were
Tom,
bouncing
let's not be mean. Come on. 42.93 on the S&P. Just a little bit. 147.64.
I think it's a better
on your
tape than
10-year.
an hour ago, John.
Thank you, Tom.
Seriously.
75.43.
It's a better tape.
Crude's higher, Lisa, by 2.7%.
Look at oil.
Yeah, and we're going to be looking at OPEC Plus. You're going to take it back on the rails. This question of OPEC Plus and the agreement potentially between Russia and Saudi Arabia. I think it's really interesting, this sort of toggle between not letting prices go too high because there is a concern about cannibalization in demand from the electric vehicle space, from the renewable energy source. That basically, if prices get too high, people will accelerate the shift away from fossil fuels, John. I mean, this is actually one of the main arguments against letting production fall too much and for prices to rise too much.
So what's the sweet spot?
That's a good question. I mean, it seems like it's about where we are right now, maybe a little bit lower, but this is the question, right? What is the sweet spot to keep this industry relevant?
Tom, what is the sweet spot on crude? Is that the debate we need to have?
Well, the behavior changed. The microeconomics change as you go higher and work higher. And what we're hearing from guys like Francisco Blanch is it's a demand dialogue. I mean, it's all there is to it. Demand's going to overwhelm any kind of supply delta that's out there.
The rally in energy equities has been overwhelming as well. We've had a move of more than 40% on the S&P 500 on the energy sector, plus 42.37%. That's energy. On the financials, the banks are up about 30% on the S&P 500.
I'm looking for an entry point.
Year to date, keep looking. And I think from an equity market perspective, for a market participant right now, I often ask people what they prefer, Lisa. You have to choose one, the banks or energy. And I'm confronted with the same answer continuously when it comes to energy. I'm not comfortable taking a bet on where commodities are going. I like the banks. But at the same time, you're taking a bet on where the Treasury market is going. And how comfortable are people making that call right now?
Not very comfortable. People are basically in a stasis, right? That's what we've seen time and time again. I thought it was interesting. DataTrek puts out these great notes and started to talk about what could go wrong, which of course I click on because I want to know what could potentially go wrong. And it says that the main issues that could potentially torpedo growth would be a Fed error, higher oil prices, which I thought was really interesting, or an earnings downturn. And that typically you have to get one or more of those to get some sort of disruption in the rally. We're looking at oil prices go up, but are they really going up quite enough to really be a trigger at this point? Not really, but at what point?
It's good to see you refreshing the material on the bearish outlook. That's nice. That's good to see.
Thanks, I appreciate that.
John,
Lisa, thank you.
Anytime.
Go on, Tom.
Nuno says we're going to make you proud.
Really?
Yeah.
I can't believe he turned down AFC Wimbledon.
Nuno's, there it is. We're going to make you proud.
Thank you, Tom.
Thank you.
Is that what he says about the Tots?
Go Tots.
42.94, up a little more than 1/10%. From New York, good morning.
Even if the economy slows, rates stay low, inflation's going to moderate, and we're still going to get positive long-term equity returns.
We think any pullbacks or any pauses in the market could be short-lived and shallow.
As this global recovery is unfolding, investors need to think more global in their portfolios as well.
The pressure will grow on the Fed to announce QE tapering. I think the debate at the Fed is shifting.
There's no doubt that to me that they're going to taper possibly by year end. I'm not sure the markets are prepared for that.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television, July 1. It is the beginning of the second half of 2021. And John Ferro, we are in a great bull market.
We are, and we're slap bang on the median year-end forecast on the S&P 500 of 4,300, Tom. We've had some huge gains year to date, plus 14% on the S&P. And for some people, this is where it ends, Tom. This is basically where we'll finish the year. Not for everyone, though. Jonathan Goldberg, Credit Suisse, he's out there at 4,600, Tom.
Been there before. You got to believe, John, they're going to recalibrate after earnings, up or down. We will find out. Joyce Chang reaffirms 4,400 at J.P. Morgan this morning.
We're all bond market strategists, TK. You tell me where the 10-year yield is, and I might be able to tell you what sector to sit in.
Yeah, Ben Laidler really emphasized that point. Lisa Abramowicz, and that's really what it's about. Even the equity team follows bonds and the bond vigilantes.
Yeah, but the bonds, what do they follow? They follow data that is very inconclusive at this point. Now, how much are we going to learn going forward, Tom, in the next couple of months about inflation, about the path of the Fed? And that, I think, is probably the key to the turbulence that some people are forecasting.
John, we're going to have Ed Yardeni on. What a great morning. Liz Ann Saunders with us, and Ed Yardeni. I'll frame him in a moment. But, John, do you notice that we hook up with Ed Yardeni by wires and the screen turns green?
Is that what happens?
It's amazing how Yardeni does
now?
that.
Up 8, up
he
2
moves. We got NASDAQ finally green on the screen. Yardeni moves the market just by showing up and doing a sound check.
I'll whip through the price action right
Please
now.
do
Up
that.
0.2 on the S&P, on the NASDAQ 100, unchanged after a big move last month. We'll touch on that in a moment. Yields up a single basis point, Tom, 147.64, and we've got to keep going back to it. A nice lift in crude this morning, 7 and a 5, a 75.61 on WTI. The first time we've been able to say that since late 2018, up 3% on the day. Major shout out to Chris Verreau, and really the first one I saw to frame $80 a barrel. Brent crude 76.39, up 2.4%. And of course, we've gone beyond that to some people framing out $100 a barrel. It was one of the toughest acts to follow in economics. Ed Hyman on the high ground at C.J. Lawrence. This is a million years ago. And the guy that replaced him was the same, or frankly, some would say even better. Ed Yardeni out of Penn brought a out of Yale, brought a huge acuity of linking economics to the markets at C.J. Lawrence and onto a storied career. He joins us this morning, as I mentioned earlier, moving the markets green by just showing up. What's the character of this bull market, Ed Yardeni?
Well, it's been very broad-based. Every now and then people freak out because it looks like it's very narrow. And we find along the way that the groups that tend to lead the market at some point start to lag, and the laggards catch up. I mean, we saw that earlier this year where the NASDAQ had a 10% correction and the overall market held up pretty well. We saw value beat growth starting September of last year. So we just have this constant rapid rotation going on in the market, and the market keeps moving higher to new record highs.
And then we saw a correction of the correction last month, Ed. We saw tech outperform, the banks underperform a little bit against the S&P. And then into the bond market, the yield curve, 2s10s was flattered by 23 basis points. Ed, this is your world. Let's go there, the bond market. What does it tell me anymore? What do 10s tell me?
I think that it's one of the reasons it's hard to get a significant correction in the stock market. I hope I didn't just jinx it by saying so, but there's $5 trillion in M2 more now than there was just before the pandemic. So there's a tremendous amount of liquidity. And with regards to the bond market, whenever bond yields go up, I get a call from somebody in the press asking me, is that the bond vigilantes? Are they back? As you recall, I coined that phrase back in 1983, and during the 90s and 2000s, they were basically nowhere to be seen because inflation kept coming down. And suddenly they came back late last year, early this year, and now they seem to be taking a siesta again. Look, I think it's hard to talk about a bond market. Markets are free. This is not a free bond market. This is one where the Federal Reserve is clearly rigging the market on a daily basis with its purchases.
At 4:30 Eastern, Lisa will be busy looking at the central bank balance sheet over at the Federal Reserve. Where is it now, Lisa? 8 trillion, pushing 9?
8.1 trillion, yeah.
8.1 trillion. Ed Yardeni, how powerful is that balance sheet going to be through the whole of this cycle? $9 trillion.
Yes. Well, a trillion here, a trillion there adds up to some serious money. And we haven't even talked about the ECB and the BOJ, which have also been doing quantitative easing. So we've got a tremendous increase in the balance sheets of the central banks. Their fingerprints are all over the global economy and the financial markets. It's a huge amount of money, and they continue to accumulate these assets. I think, though, clearly we're heading towards an environment where they have to consider tapering. Let's cut back, folks. I mean, for example, housing, we've got a booming housing market. And so what are they still buying mortgage-backed securities? Where does that make any sense? And whenever they talk about their tapering, they say, well, it creates financial market stability. What that means is that they've been successful in pegging the bond yield and keeping it from going higher. If it wasn't for them, I think the bond yield will be at 2% today. I think it's going to go there by the end of the year because I think tapering is coming.
All right, so tapering, you think, even the beginning of paring back the $120 billion of purchases of securities, you think could send the 10-year yield to 2%?
Yes, I do. I think once the market starts to get a schedule from the Fed, I think the Fed will discuss it at the FOMC meeting in July, and I think in September they'll implement it. They have to. The economy is booming. Inflationary pressures have been pretty intense. Some of them are base effect. Some of them are maybe a little bit more permanent. So I think tapering is coming. And then the market's going to look at its schedule and say, well, you know, after tapering, once they're done tapering, which could be the first half of next year, they'll start raising interest rates. And that plot keeps drifting towards increasing interest rates in 2022 instead of 2023. So it's coming, and I think the bond market's going to be somewhat freer to express an opinion on the fact that the economy is strong and inflation is over 2%.
And I'm sympathetic to this idea that Treasury yields will rise when the Federal Reserve decides to buy fewer of those securities each month. Right. However, when they took a more hawkish tone, at least as reflected in the dots earlier this month, the long end went down. You actually saw yields drop, price higher. How do you understand that and extrapolate that forward as to the market response to potential tapering?
Well, again, I think it's really hard to psychoanalyze the bond market when the psychiatrist is. I don't know if I like this analogy that much, but you know what I'm saying. I mean, the Fed just keeps buying Treasury and mortgage-backed securities, and I think that's why we've been holding here around 1.5% on the bond market. But once they've already started to hint that they're going to taper. For example, they're not backing up the corporate bond market. They don't have to, so they're backing off on that. They increased rates in the very short end of the marketplace because you can't really have negative interest rates and not put the money market funds out of business. So I think they're already moving in the direction, and I think the bond markets will reflect that. Look, the yield curve is behaving actually pretty normally if you look at it over the past year or so. It's been ascending, steepening, and I think it continues to steepen. Usually it steepens to the point of 300 basis points. We're only halfway there.
Do you think that the stocks can continue rallying even as the Fed eases the pedal from its monthly bond purchases?
Yeah. I do, because as the Fed becomes less stimulative, there's still a tremendous amount of stimulus that's just kind of sitting there in liquid assets. Again, M2 is up over $5 trillion since the pandemic started, and that liquidity can. If you look at the M2 divided by GDP, you know that's the flip side of velocity, which is not my favorite variable. But if you look at M2 relative to GDP, we've got something like a year's worth of M2 relative to GDP. So there's a tremendous amount of liquidity that can go either to the economy or the financial markets or real estate or all of the above. All of the above is my choice.
Ed, did you ever think we'd be in a world where unemployment would have a 5 handle and a 10-year would be sub 150? Did you ever envision that kind of world?
Well, it's hard to imagine a world like that without the Fed being so interventionist in the bond market. There's various relationships like the copper-gold ratio and the bond yield, which have actually worked pretty well in the past. And that relationship says that the bond yield should be closer to 2.5% than to 1.5%. But the relationship hasn't worked because of all that intervention. I think these things don't stay out of kilter for very long. I think the divergences will converge, and I do see bond yields going higher.
Ed, that's the call. It's good to hear from you. Ed Yardeni there, Yardeni Research President. Tomorrow, unemployment, the median estimate, 5.6%. The previous month, 5.8%. Your 10-year right now, Tom, sub 150.
And the revisions will be important. I mean, we're all trying to figure out trends here. Lisa showed the claims chart. We see that, John, in 20 minutes, make it 19 minutes. To me, that's the most elegant chart out there. I know it's removed from jobs, but I'm sorry, the claims is an inertial force to a better American, a more fully employed economy.
And Lisa, we're moving in the right direction.
Yeah, the claims are going to be highly political, though, and I want to point this out because people are digging through specific states that have ended the enhanced unemployment benefits and trying to see how much more their unemployment rate went down, how many fewer claims they actually filed. And I think that may be one of the biggest things that we can glean from this, whether it's actually accurate or not. I mean, it's messy data, but it's very political nonetheless.
It's not going to last long, that debate, though, is it?
No.
July, August, September, we're done.
Right, and this is just an idea of frictions, not necessarily a weighing in on the enhanced unemployment benefits themselves, that a lot of people say is what gave people the savings that can turbocharge the economy.
388,000, that is your estimate for claims. They come in about 18 minutes' time. From New York City this morning, good morning. Tom Keene, Lisa Abramowicz, Jonathan Ferro, heard on radio, seen on TV for our audience worldwide. Your equity market, all-time highs, pushing 42.95. On the S&P 500, we're up by a little more than 0.1%. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. The Trump Organization's longtime CFO has surrendered to authorities in New York. Alan Weisselberg faces tax-related charges. So does the company itself. It's the most direct attack on Donald Trump and his company to emerge from a years-long criminal investigation by the Manhattan District Attorney. Saudi Arabia and Russia are said to have a tentative deal to gradually increase OPEC Plus oil output in the coming months. Negotiations over the details are still underway. The debate between OPEC and its allies has big implications for the global economy. Crude has risen about 50% this year. The recovery in demand has outpaced the revival of supplies after last year's deep cuts. And tomorrow's U.S. jobs report will show whether employers had greater success filling a record number of vacancies. The last 2 months of hiring have been seen as disappointing. According to a Bloomberg survey of economists, payrolls rose by 711,000 in June. Still, forecasts for the last 2 months were well above the actual figure. China's President Xi Jinping sounded a defiant tone today in a speech marking the 100th anniversary of the country's Communist Party. Xi called China's quest to gain control of Taiwan a historic mission, and he warned that the country's enemies will break against a, quote, steel Great Wall. And Robinhood reportedly plans to set aside as much as 35% of its shares in its IPO for individual investors. That's a bigger percentage than normal. Dow Jones says the stock trading app wants people to sign up to buy the shares on its new IPO platform. Retail investors are largely shut out of IPOs. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The way that this shock has transmitted itself throughout the economy has been very unequal. Prices are rising, and if prices are rising faster than wages are rising, then those nominal wage increases don't actually translate into real buying power. The recovery has just been so much faster than many people thought it would be.
Andrew Hollenhorst there, the city chief U.S. economist from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. 8:18 in New York. That means we're 12 minutes away from jobless claims in America. Your market, 42.94 on the S&P, up a little more than 0.1%. 5 days of gains coming into Thursday. 5 months of gains. 5 quarters of gains. In the FX market, euro-dollar 118.80. In the bond market, yields are higher by a basis point. Tom, your 10 years 146.96, and just a final word on crude, 75.53.
Yeah,
up
elevated.
by 2.8%.
Yeah, still climbing. 76.32 on Brent crude, up 2.3%. That's a nice move. We'll watch that closely here through the morning, including the open with John Ferro. Look for that in an hour time after the claims report, and then continue to look for John Ferro on the real yield this afternoon.
Thank you, Tom.
as he
It's tomorrow.
crushes it into the
Real Yield's
weekend.
tomorrow.
It's tomorrow. Well, you can do the dress rehearsal today. That'll
Thanks.
work
I'll
out
do that just for you.
fine. Right now, Mr. Wesselman is going to do a dress rehearsal, except it's real. There's something about the clarity of Center Street in Lower Manhattan. And if you are ever so lucky, you go into AR1, which has better air conditioning than AR2, AR3, AR3A, or AR4. Those are the arraignment rooms at Center Street. Tina Davis is here to give us color here, our legal executive editor this morning. I want to forget about all the Trumpian stuff like that. What's the emotion when you go in there? Does he go in with handcuffs on into the cold Center Street rooms?
Well, it sounds like you've been arraigned yourself once or twice, Tom. No, what happened this morning
This is her last appearance. How'd you know that? You read in on this very well.
Often indicted, never charged.
Thank you.
Look, he came in today. He surrendered to authorities. So there was no handcuffing of him at home. As you know, prosecutors like to wake you up early in the morning with a knock on the door and some handcuffs. That did not happen in this case, as is more common in white-collar crime. There was an arrangement with his attorney. He actually came in to 1 Hogan Place, which is where the Manhattan District Attorney's office is, actually through a freight entrance.
Okay,
so there's a phalanx of photographers and cameras set up outside of this building, and almost everyone missed him.
You were grizzled at this. What's the emotion that changes when, as one legal expert said, your name's in the caption, or your name's on the little door outside in front, or you're in the side room with your lawyers going, okay, we're here. What changes for him today emotionally?
Look, it's the state of New York versus Allen Weisselberg. I mean, there's a separate case with Trump, as you pointed out, but this is very personal now, and he will be able to see the full indictment against him, which gets unsealed later this afternoon. He'll be able to see the number of charges. So, I mean, what we're still waiting to see is exactly what he's going to be charged with. We have some sourcing that indicates it has to do with some of the fringe benefits he received that weren't properly taxed or paid for from the company. But look, we're talking about what's potentially a multi-count indictment, and then he'll be able to get a sense of what the potential penalty is in terms of prison time.
Tina, the mood is that Allen Weisselberg is not the main target. It's former President Trump, and that this is a way to get to former President Trump. Is that what you're hearing from your legal sources?
I mean, absolutely. This guy worked for the Trump Organization for 4 decades. More than half of his life has been spent working for the Trump family. And he's the CFO, and as we've seen from other places, he's been described as someone who knows where every penny goes in and out of that building. So yes, if you're bringing an indictment against him, I think it's also interesting they're bringing an indictment against the company itself. But if you're bringing an indictment against him, you're hoping that this will pressure him to start cooperating with the prosecution.
Tina, former President Trump has said this is politically motivated, that it is a hit job. How political is the DA's office that is prosecuting this case? Can you just sort of paint a picture of the objectivity or subjectivity at stake here?
Well, one thing I would point out, Cyrus Vance, who is the Manhattan District Attorney, is a Democrat, as you would expect for any citywide office in New York. But he's also not run for re-election this year. So this is the end of his term. In terms of what this means for him politically, there is no kind of next job, or he's not doing this to seek favor with New York City electors. We've certainly seen the people who are vying to replace him, make statements to the extent that they would continue this prosecution and continue to go after Donald Trump. But look, I mean, this is a Democratic city. This is a city that has long been hostile to Donald Trump and his policies. So you can't discount, that sort of emotional arena that we're in.
Tina, can you give some sort of sense of the scale of the situation that Allen Weisselberg is in terms of the potential penalty, in terms of time served, in terms of what actually, how severe what he is allegedly supposed to have committed actually is?
I would love to do that, but the problem is we haven't seen the indictment yet. And so until we have a sense clearly of what the charges are going to be and how many charges he's facing, we really can't speculate on what time is involved. Again, what we're hearing from sources is that this involves fringe benefits. That doesn't seem like something that would normally be, the kind of thing that you would throw someone away in prison for a very long time for. But it depends on how long it's been going on, if there are other charges that we're not aware of.
What's the distinction here between 100 Center Street and guessing 500 Pearl Street? The New York versus federal court process here for the Trump Organization.
Well, I mean, there's a few differences just in the way things are carried out. In New York, there's a specific law having to do with corporations that they can be subject to something called enterprise corruption, which is sort of the state version of a RICO law. But again, it uses, you have different sort of parameters and basic sort of levels that you need to hit to be to qualify for that. So there are different laws in play here. And it's all very based around New York specific law, which, as you know, is very interested in corporate malfeasance.
Just the perfect guest this morning, Tina Davis of Bloomberg. Tina, thank you. Thank you so much. We need to reset for claims in about 6 minutes' time. Jobless claims in America, 388 is the estimate. That would be a move lower, Tom, from the previous week of 411.
Yeah, it's a trend there. As I've said many times, it is the most elegant chart out there. This has a persistence to good news, John, but I do take the point of the experts like Mike McKee. Claims is not jobs tomorrow. They're really two separate entities.
Immediately pushing forward to payrolls Friday, Lisa. Your estimate there, 711.
Yeah, the idea here is how much momentum can we get behind just the pace of hires and, frankly, the pace of people who are entering the unemployed ranks. Continuing claims is what I'm keeping my eye on as well. It's expected to be 3.34 million people still receiving ongoing claims, going down, but at a very slow pace, John. Why are there so many people on unemployment rolls if there are so many job openings out there?
Who knows? And to go with the who knows, this is the perfect supplement. There is a 650K spread between the high and the low estimate for payrolls going into tomorrow. Tom, it's still wide.
It's what, there's a heated debate out there, John. What I noticed, and I can't cite it, I'm so sorry, but it's amazing how New York and California have the delta in the restaurant hospitality area. There's some real regional differences and almost state-by-state differences.
This has just been tremendously difficult to read, Lisa, over the last several months. And going deeper into summer, we still haven't resolved some of these big issues.
And we really haven't resolved the issues of childcare. And I don't mean to harp on that from personal experience, but if people's kids are not in school or away at summer programs, it's tough.
You're right to harp on that, and that's why people keep mentioning September as a month to really focus on for this labour market. From New York City this morning, good morning. Lisa Abramowicz, Tom Keene, Jonathan Ferro. Equity futures, 42.95. The jobless claims report is next. From New York on TV and radio, this is Bloomberg. Live from New York City on radio and TV alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Your equity market looks like this going into the data here in America. Equity futures up 5, advancing 0.1% on the S&P, 42.93. In the bond market, yields basically unchanged at 146.96. With your data, here's Mike McKee.
Well, John, for once we get a downward surprise, better than expected jobless claims numbers. They come in at 364,000. That is a decrease of 51,000 from the previous week's revised level of 415,000. And it is much lower than the 388,000 that was forecast. What we also are looking at, obviously, is continuing claims, because we want to know how soon people are coming off these rolls. 3,469,000. That's higher. But, of course, that number is delayed by a week. So it is not as good a news on an ongoing basis. But we do see some progress being made.
Just want to turn to the price action briefly. Mike, S&P 500 futures up 4, advancing about 1/10%, basically where we were. Looking at the bond market at the moment, yields pretty much where we were too, 147 on a 10-year, almost 2.1% on 30s. Mike, you teed it up nicely going into payrolls. Is there any read on this from claims over the last couple of weeks going into payrolls tomorrow?
Well, there's not a lot, because these are people who are not working, who are getting claims, or who are no longer getting claims and could be working, but it doesn't tell us necessarily that they did get jobs. And that's the big dichotomy between the JOLTS numbers of those who are looking for work and those who are offering work. So we'll have to wait until tomorrow to see what progress has been made.
I went to a fancy chart, Mike. We're not going to show it. Log convexity here of an elegant chart, which reaffirms reaffirms ever more elegant this morning. I mean, we're heading towards a fully employed America. You've got an important GOP map up the Mississippi and even out beyond the Missouri River as well of the states here that have said we're not going to play with Washington's game.
Yeah, one of the big issues is have people not been going back to work because they can get unemployment benefits. And so a number of states cutting them off early. And we can look through the list here and see that in terms of initial claims, Alaska, one of the first to cut it off, down by 17,000. Iowa goes up by 189,000. So maybe it doesn't hold through there. But Mississippi and Missouri both cut off a couple of weeks ago, and Mississippi's down by 302,000 and Missouri down by 247,000. Yeah, that's a lot as a percentage. I don't have the exact percentage calculated, but it does tell you that we're seeing a big drop in initial claims. And then when you look at the total claims for those states, Alaska is down by 753,000, and Iowa is down by 2,003,000. So we're seeing a lot of drops. Actually, not 1,000, I'm sorry. Alaska's down by 753. But we're looking at significant drops in the states that did cut off benefits. That just tells you that they cut off benefits and threw those people back out onto the street. Did those people then get incented to go get jobs? That's what we don't know yet.
Mike, one thing that you're pointing to also is this dispersion in the recoveries in the different states, how different states are with respect to how high the unemployment rates are or how low. What are you seeing in terms of the tale of two sides of the United States?
Well, it doesn't appear that there is a significant difference geographically in terms of the number of people who've lost jobs recently. We are looking at, California, which is still paying generous benefits, sees 6,000, almost 7,000 jobless claims fewer than the week before. But that doesn't tell us that those people are going out and getting jobs. And that's going to be the hard thing to parse out. We don't get the data on state-by-state employment until later in the month.
You with us tomorrow?
I wouldn't miss it.
Very well. The Red Sox are in first place. I thought, best
the Red
record
Sox,
in the American.
and they've increased their lead. So you
good. I thought maybe you were taking another Red Sox game, as I don't. He somehow goes to Red Sox games and
solid banter, gents. This is good.
It's important. Red Sox.
It's good to have Mike with us tomorrow.
First in the American League.
Thank you, Tom.
Constance Hunter is going, what are they talking about? She's with KPMG, their chief economist, and joins us this morning.
I'm a Yankees fan.
Well, you're a Yankees fan. Well, please. What Doug Cass send you in? Constance, we can't talk Yankees, Red Sox right now, but we can't talk claims to jobs. Does this claims number adjust your jobs outlook tomorrow?
Not really. And I just want to say with regard to the state map that you put up, what we have in our latest chart book is that same map overlaid with the vaccination rates, because we think that this is a big thing that is keeping people on those continuing claims. So when thinking about the impact of the cutoff of pandemic unemployment insurance supplemental dollars in certain states, we need to look at the continuing claims, and we need to look at what's going on with vaccination rates in those states, because we still have over 40% of working age adults have not received even one vaccine. And we think this, combined with childcare, are the things that are really holding back people going back to the labor force.
Is this why people keep bringing up September, Constance, the date in the diary on the calendar for this year, that some of these issues might get resolved or begin to resolve them?
Yeah, sure. If we go back to 100% in-person school, and we are working on vaccinating young people, so that those odds keep going up if we keep getting those vaccines distributed. But I should point out, for if you have young children that aren't yet in school, we have 8.5 fewer daycare workers than prior to the pandemic. So daycare, if you have young children, is very, very difficult to find as well. So it solves the problem for everybody who has school-age children. It doesn't solve the problem for very young children.
Constance, let's extrapolate out and build on this, particularly with respect to this argument over whether to end the enhanced unemployment benefits earlier rather than later. Are there any detrimental effects from ending them now based on what you're saying?
Well, if you believe that the supplemental unemployment insurance has limited economic scarring, and data certainly suggests that it has, right? So we see personal bankruptcies are down, delinquency rates are down, we see savings up. So we know that household balance sheets have benefited from the supplemental unemployment insurance, and that should limit economic scarring. So as we enter the recovery phase, people will be in a better position to consume, and that, of course, will help the recovery. I do think we're far enough along that a lot of that scarring should begin to dissipate as the economy continues to reopen, as people continue to get vaccinated, as we get children back in school in the fall, all these sorts of things. There's good momentum. But what we really don't know is how much of this is related to vaccination rates. And we can look internationally. Interestingly, you see the same phenomenon globally, especially in developed economies that you see here. Leisure and hospitality workers really reconsidering, is this a field I want to be in? Are there other options that I could be doing? If we go back in history and look at previous pandemics back 500 years, we observe something really interesting when we compare wars and pandemics, right? Because both have loss of life. But in pandemics, there is an increase in real wages after the pandemic. And it seems like there is some hesitancy to go back to in-person work after pandemics. Okay. And you see it in the JOLTS data as well. You see all this churn. People reevaluate, what is it that I want to be doing with my life?
Okay, Constance, we got wages up. I mean, Morgan Stanley really emphasizes that. They call it wage gain potential. I get it. I also have inflation up. Right now, I've got a massive negative real wage growth. Do I get to a positive inflation-adjusted wage growth?
I think by this time next year, you absolutely do. But we're looking for a 2.3% inflation this time next year. So we're expecting to dissipate, but we're still expecting pretty healthy inflation. With that said, we're also looking for a growth rate that's close to 5%. So when you combine these two things together, I think that we will see real wage growth. And the question is, which segment of the labor market? So right now, we're seeing the wage growth in the segment of the labor market that has to work from their job site. And that unemployment rate is about 6.5%. But the increased demand for wages, the reservation wage, the wage at which people are willing to work, has gone up for people without a bachelor's degree. So that's a lot of the people that have to work at their job site. For those people who can work from home, the unemployment rate is 2.7%. And if you imagine that this is going to be a recovery that's 5 years, I would see, if you look a year or two out, it's that 40% of people with bachelor's degrees that can work from home that are already in a tight labor market, where you're going to see the bulk of the wage inflation throughout this cycle.
That's a really interesting final point. Constance, thank you. Constance Hunter there,
Should we
KPMG,
do the show from home?
Chief Economist. I think we did that, Tom, for about 4 months.
Yeah, it worked out.
How did that work out for you?
It did not work out well, folks.
That did not work out for me.
Let's recapitulate that at mid-year here. Thanks to our technical team who jumped through massive hoops to get that done and to get us back.
That was a tough time. Go on, Lisa.
Can I just say, I want to offer thanks to my two boys who sat on the couch eating breakfast while I was broadcasting, just to give you a sense of the childcare and the working from home situation.
Can I also say I'd like to thank Vet Bill and Kennel?
Of course, yeah. I mean, what are these Oscar speeches? Is that what this
John,
has become?
who would you like to thank here?
I would like to thank my mum. I'd like to thank my family. No,
The bartender
Equity Futures,
at the bottom of the building?
42.94. I mean, yeah, he needs a thanks, Tom. We haven't seen him for a while. We're going to go back there soon.
We should.
Up 6 on the S&P. Up a little more than 1/10%. In case you don't know and you're not familiar with this show, this board here with the markets, that is my crutch. 146.29. Yields unchanged on 10. Lisa, 75.33. 75 handle on crude.
I don't think you had to say that. I think that everyone could
Everybody
tell
knows.
that you were just go to markets when things get pretty awkward.
What do you think of that September issue? Keeps coming up, doesn't it?
Yeah, well, I think that it's a real one, especially for people who have kids. Look, I think that it's very difficult, especially when they're not doing anything. They're just sitting at home, Roblox.
Are they still just sitting at home?
Well, mine are actually.
Are they trading yet?
Yeah.
Did you give? This is the most for our
slowed
audience
down.
worldwide. This is the most important question of the day. The Abramowicz boys wanted a pool of money so they could start trading. Did the Abramowicz boys get that for this summer?
No. Hold on a second. Mr. Ferro was lobbying Ms. Abramowicz
I think it's important.
to get their boys. I haven't gotten it for them yet, but at some point, perhaps little Abramowicz will be on Robinhood.
Are you going to?
I'm a little nervous.
Why?
full into Dogecoin because that's what they understand.
Let them understand the lesson of losing money.
Yeah, with my money.
Yeah, just a little bit. You can set the
right.
extremes of whatever they lose. That's up to you. That's a personal decision.
We can take this offline.
John, Anne-Marie emails in.
What does she say?
She says Yankees.
Is that what she said?
That's what she said.
In an
Value
email.
add.
This whole show's been value add this morning. Laura Kane of UBS is going to join us on Bloomberg TV in the next hour. Looking forward to that. She is bullish the equity market and she still likes the cyclicals from New York City.
Cubs fan.
For our audience worldwide on TV and
Chicago,
radio.
John.
This was special. Thanks, Tom. Where's Chicago? Come on. Why do we always do this? Why do we do this? Why are we still doing this? I understand where things are in America. This is
And the
Bloomberg.
mic's still on.
With the First Word News, I'm Ritika Gupta. For the first time, a multi-year investigation of Donald Trump's company has resulted in criminal charges. This morning in New York, the Trump Organization's longtime CFO, Alan Weisselberg, surrendered to authorities. He and the company face tax-related charges. Neither the former president nor his sons are expected to be charged. And a federal judge has blocked Florida's new law penalizing social media companies for barring political candidates. The law was to take effect today. It was signed last month by Republican Governor Ron DeSantis. The judge ruled that the law violates the First Amendment and doesn't apply to all social media providers equally. Nissan and battery maker Envision will build a $1.4 billion hub for making electric vehicles in the UK. The Japanese automaker will produce a new all-electric crossover vehicle at its Sunderland factory in the north of England. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
We're not yet in dangerous levels in terms of wage growth. The U.S. economy can absorb higher wage growth without really creating a higher inflation. What I'm really going to be looking at is inflation expectations, especially from the business side, actually, because they are the one setting prices. And you see actually a creep up in those inflation expectations.
Thomas Custard there with Pictet there with some real optimism on the American economy. We have important interviews with Liz Ann Saunders, Ed Yardeni, and many others as well. Lisa Abramowicz with the Tom Keene as John Farrell waltzes off to the 9 a.m. hour, an important hour, particularly given what we see downtown. Is the chief financial officer of Trump Organization is scheduled for some form of arraignment proceedings. We'll see how that goes through this morning. Right now, not downtown, but in Midtown was a reaffirmation of all that Dana Telsey believes in. Dana Telsey is definitive in fashion and the study, the security analysis of what we buy and wear every day. And Dana, it was Marc Jacobs at the public library, and as Vanessa said in the New York Times, there were hugs and kisses. What is the symbolism of New York's finest, Mr. Jacobs, doing a show here in the heat of New York City summer?
I think it's about the reopening and the recovery that's just beginning. The fact that vaccinations have been given, that there's more to go, that there's a safe way for people to socialize and gather. It's been over a year, and I think everyone's missed it. And that's why what you, Tom, and I have talked is it's a time period of supercharged change.
What's so important here, Dana, is Anne-Marie Horton down in Washington for Bloomberg News was killing it this morning, wearing Marc Jacobs in pink. Lady Gaga says pink is this summer's color. Are we going to refill our closets with pink?
I think we are refilling our closets. We're refilling with fashion. Basically, everyone wants optimism. What does optimism show? That you can go out and people can be together again. So I think these trends, I think they're going to continue. I think consumers have money in their pocket, and we're going to have a super holiday season if companies can only get the inventory. And keep in mind, we're seeing so much change out there. We're seeing companies overall look for ways to better serve the consumer in all different areas.
Tom, where do you find out style trends?
Where do I find them out?
Yeah.
I read Dana Telsey and Joe Feldman at Telsey Advisory Group.
I don't see any pink discussion in her note. Dana.
Come on, Lady Gaga's all over this. Leave the lovely Gaga alone. She says it's pink, it's pink.
All right, moving forward, Dana, aside from the pink call, you talked about how consumers are dealing with their orders in a different way, the online world and how that has affected brick and mortar. What are you expecting, particularly in the second half of the year, in terms of the distribution between e-commerce and brick and mortar as more people get vaccinated?
So what we're seeing is even as stores are reopening, online sales remain solid. And I think, if anything, the supercharged change that's gone on, I think the COVID crisis created innovation, leading to the acceleration of so many things that would have taken 3 to 5 years to achieve. So what you're seeing out there is an accelerator of new business model capabilities. I think stores recover. They may not get the same traffic because you have purposeful purchasing, but what you are getting is you're getting more customization. Consumers are going in there and converting. And you know what we're seeing? We're seeing every category being disrupted by change. And there's like a sea change every 10 years. So what used to be the category killers of the 1980s and 1990s are now the disruptors. You think about it, and so many of these companies are still private, whether it be Warby Parker in specialty retail, Forward in healthcare, Birdies or Rothy's in footwear, Glossier in cosmetics, Holly in the auto performance aftermarket. Yeah. Private companies with a lot of runway in the DTC market.
Dana, how much pricing power do these consumer-facing companies have, given the fact that we're seeing input costs rise to the degree they are?
I think inventory levels are lean, supply chains are disrupted. We're seeing better merchandise margins than we've seen in years. And I think that we're going to continue to see solid margins going forward. Are we going to get back to promotions? I think we will. But the extension of what these delays are, I'm hearing you won't get normalized inventories until nearly the end of the year and into 2022.
Dana, where's value in luxury right now? If somebody wants to buy the usual names, LVMH, Gucci, Keurig, the rest of them as well, is there any value there? Or are they just priced to perfection?
I think there's still more value there. I don't think you can look at the history before 2019. I think we have to go forward. And I think the engagement of consumers with luxury, you have the Chinese that are staying in China. When tourism comes back, it's going to accelerate the rest of the world, and you have locals buying here in the U.S. Keep in mind, Tom, look how Chanel raised their prices. We're hearing a price increase in the space.
Yeah, Dana, thanks for bringing up a sore point. Joe Feldman crushes it on Amazon as well. Link your world into Joe Feldman's world. Is Amazon out front on fashion, or is Bezos going down in flames?
I think Amazon is out there in so many categories. I think they can be for essentials, and you're seeing other types of companies be very singular in nature in terms of what they're able to do with categories. That's why I say category killers, DTC companies like the ones I mentioned, are going to be able to resonate against Amazon. You're seeing vintage in all different categories be very relevant.
Dana, thanks so much. Go away. Chanel is overpriced. That's what I learned. Dana Telsey, thank you so much. Telsey Advisory Group as well. Lisa, I'm sorry. I just think, Gabrielle Chanel and a fashion manifesto, I could see you manifesting Chanel this fall.
We've discussed fashion many a time, Tom, and you will be my sartorial guide going forward. What, you think a bow tie would work?
No, I don't think a bow tie. I just think, I think, we got to talk to, the higher ups here about, a full Chanel look.
All right, let's reset on the jobs market. I want to just say, we've been digging into the data, and I want to just sort of underscore something Michael McKee was talking about. The idea here of how people are looking in the state-by-state data to see which states saw the biggest declines in the unemployment filings and which saw increases. I think it's really interesting that Indiana reported an increase because that was one of the states that ended the pandemic unemployment assistance early for self-employed workers. So this idea here that there is not necessarily a correlation, how idiosyncratic is that? And just to give you a sense, initial claims in Pennsylvania, Kentucky, and California posted the largest declines. Massachusetts and Indiana reported increases.
Well, that's the granularity of it. And there's also the big picture as well. And if you say whether it's Ed Yardeni, 7.6 million jobs need to be filled, or maybe it's Economic Policy Institute saying 10, 11, 12 million need to be filled, it's just time out at least. It's a month-by-month thing. We're focused on tomorrow, but maybe it's 6 job reports in a row?
Well, the idea here is if you can't bring people in to staff your store, that constrains your potential growth at a time when suddenly people are roaring back in, right? I mean, well, raise the wage, yes. At the same time, smaller businesses in particular are complaining that they can't make money then.
Raise a wage.